This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, John Tucker in for Michael Barr, Lisa Mateo, day after day here as well. We've got a wonderful lineup for you today. Rebecca Patterson just darkened the door of the studio, not gloomy. She's optimistic. She's in the markets. She's not gone to cash. We'll talk to Rebecca Patterson about the state of affairs now, really the correlations of everything going on. Paul, it's Correlation Thursday. What do you see out there?
I see a little bit of red on the screen here, Tom. I'm not going to make too much about it. We got the S&P off about 6 points here, but not too much here. The yen kind of sitting here right at 146 here. I'm keeping an eye on that because you tell me it's important. The whole carry trade thing.
The whole carry trade thing. I mean, I rolled out Kansas. We're not going to play Kansas today. I rolled out Carry On My Wayward Son, and seriously, the theme here is a shift from the bet on Japanese leverage, the Japanese play, over to Chinese leverage, the Chinese play. What do we do after we're done clearing China? Do we go to Jakarta? I don't know. Good morning.
Go to Jackson Hole is what we do. That's what we do.
We're going to Jackson Hole, which actually we can talk to Rebecca Patterson about that as well. I'm going to lose the early data check here. Lisa will do that better than I will, other than to say a churn to the markets. We wait for 90 minutes away. Claims will be important here to speak of the American economy. We're in the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mateo.
You got it. And we do have a bit of red on the screen. The focus shifting back to U.S. economic data, when the Fed will cut interest rates. Today, we get some more insight. We have initial jobs claims for last week. That's coming out at 8:30 a.m. Wall Street time. So let's check the numbers. So we have NASDAQ futures, little change, down about 16 points. Dow futures down about 0.2%, 110 points. S&P futures down 0.1%, or about 8 points. We have the 2-year yield at 3.95%. That's down 1 basis point. The yield on the 10-year 3.91%, and that's down 2 basis points. Want to check on currencies. The Japanese yen up about 0.4% at 146.02 against the dollar, and checking in with the Nikkei, have to point out that as well, down about 0.7%. We have the SOX 600 over in Germany down about 0.8%. DAX in Germany down about 0.7%. Want to get to earnings. Warner Brothers Discovery, have to talk about them, down 10%. It posted a nearly $10 billion quarterly loss, mostly due to that write-down in the value of its cable networks like CNN, TNT, TBS, and then Eli Lilly just coming in. Shares up about 9%, boosted its revenue guidance for the year. Second quarter revenue for its weight loss drug, Zepbound, that topped estimates. And then we go from weight loss drugs to Krispy Kreme. Yes, second quarter.
Nice security there.
You like that one.
Nailed that.
Earnings per share on par with estimates, but their shares down about 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you for that. This could be a 3-hour conversation. We've got precious minutes this morning with Rebecca Patterson, a tour of duty with Bridgewater, sound trust advice at BMO Capital, and we're thrilled that she could join us. BMO Trust, I should say, and we're thrilled that she could join us. Paul, we're going to ignore the Patterson paragraph on Bitcoin.
Okay,
We're just going to ignore it because there's too many other things going on right now. I want to go back to JPMorgan, where you understood dollar yen versus Korean won and the rest of it. The carry trade, JPMorgan publishes this morning. You know what? It's mostly done. I've got my own theory. What's the Patterson theory on when this agony is over?
Well, I think you actually do need to listen a lot to the big investment banks that have large FX trading operations right now. JPMorgan's obviously one of them, because they're going to have the best real-time data on where investors are versus where they were and what might seem comfortable in the new environment we're in. So you've seen JPMorgan say maybe we're almost done. A few other banks I've read in the last 24 hours say we're not done, but we're closer to the end than the beginning.
Okay, what you do in the summer and in August at the Patterson household and the Keene household, when the brats are up, you slap them and say, shut up and watch a real movie. You can't watch Glee 5 times. So you're watching Butch Cassidy. Who are these guys? Who are the people in the carry trade? Is it dreaded hedge funds at Hudson Yards?
So just for the record, I've never slapped anyone. I know you're joking. Feel like I need to get that out there. I think we don't know yet who exactly has been in the carry trade, but I would certainly assume that hedge funds have played a role. But one piece of the market that I think we need to pay more attention to is the retail investor. If you look at data from the Federal Reserve, the total market, the percent that's retail today, is the highest it's been since, get ready for my dates, 07 and 99. Now, that doesn't mean we're going to have the same ending to this movie, but it does mean that they're playing a significant role. And today, they have more tools, including zero-day options and levered ETFs. They have easier access with all these free to cheap platforms. So I wouldn't be shocked if there is a surprisingly large retail element to all of this.
What do you make of the last 4 or 5 days of trading? We had that jobs number last Friday that really seemed to spook the market a little bit. We had a lot of selling and instability in the marketplace the last several days. Maybe what do you make of kind of where the economy is and maybe what the Federal Reserve is thinking about?
Sure. So the poor manufacturing sentiment and the payrolls certainly came right together with the Bank of Japan decision, not just to raise rates but give hawkish guidance. That plus positions, I think, all came together to trigger this sell-off. But when I take a step back and look at the economy, I think we're still kind of 50-50 if we get a soft landing or something bumpier. The service sector sentiment, and the service sector is a much bigger part of the economy. It's still holding up well, better than expected, still expanding. Yes, we're getting a lot of earnings suggesting consumer caution, but so far, most of those seem more focused on the lower end consumer, which we know has been stretched for some time. But I do think it makes the recovery more vulnerable. So if the expansion more vulnerable, if the wealthier consumer starts getting more cautious, or companies just say we need to start cutting some jobs or paring back investment, this thing can get a negative kind of flywheel going pretty quickly.
So what does our Federal Reserve do here come September?
Well, we have almost 50 basis points priced in for September. I do think it's likely we get a cut. The question is it 25 or 50? I think that will be a debate. We'll get guidance from Powell at Jackson Hole, as you mentioned earlier, and we have a lot of data. So it's going to be, I hate to say this because it sounds like a cop-out, but it is going to be data dependent in terms of the degree of the cut we get September.
I agree on the data dependency. Bruce Kasman out with a note this morning following up on a statement 10 days ago that he sees global disinflation. What I don't see in the zeitgeist right now, Rebecca, is a discussion of the dampening effect of disinflation and deflation on the optionality that institutions have. They're going to run out of choices here if we get Wei Li's 3% China GDP growth, if we get Kasman's global disinflation. How constrained are institutions going to be 6 months from now?
Yeah, I mean, we're already starting to see more companies feel the heat from not being able to raise prices as much.
Yeah, did you see Warner Brothers Discovery? That was heat yesterday.
That was a little heat. Or the McDonald's $5 meals. We're seeing companies realize consumers are saying no more, and so they're having to react to it. And if that continues, obviously, we're going to see it feeding through into profit margins.
What have you seen from earnings this period? How would you characterize it?
Yeah, I mean, I wouldn't say it's bad by any stretch, but I think what the market is latching onto is this sense of caution with the consumer. What struck me, though, is it's coming from China and the U.S. So there's two stories here. There's the soft China story and the cautious U.S. consumer story. And I wouldn't take my eyes off of China. Tom, you mentioned the Chinese renminbi earlier, when we talk about carry unwinds. And China, their bond yields have fallen so far. The government's now threatening to intervene to push up bond yields because they don't want a speculative bubble in bonds. The last thing they need is higher yields right now with their economy so soft.
Right.
So they're kind of stuck. And I think we need to keep watching how that flows through both to disinflation and growth.
I want to overlay here your experience with talking to people where short term is 3 years.
Yeah.
How do you prosecute an adult investment cycle or unknown future given the cacophony of short term idiocies?
What a great sentence. This is why I love coming on air. You know, it was
I'm
beautiful.
not awake. I stayed up and watched Siberia synchronized swimming, so I'm not awake.
Well, just like Christine Lagarde, I was a synchronized swimmer, so I'm all
Really?
about that. Yes,
How
that's
do you
another
do it?
conversation.
Stop the show. Stop the show.
Whoa.
Stop the show. Breaking news here. We got 3 minutes left.
No.
How in God's name do you put your feet up in the air like? I mean, I talked to Lagarde yesterday about this. What are you doing with your hands to get your feet that far up in the air?
Well, the technical term is sculling, but you're just moving your arms back and forth, almost like a little propeller. But let's get back to investors. Yes,
Would you do synchronized swimming in the Seine?
No, not in a million years.
Okay, get back to the
Okay, all right. So focus. I've had the luxury of dealing with very short and very long-term investors, and I think for the longer-term investor today, this is an opportunity to say, is there anything I've liked that I can now get 10 or 20% cheaper? And I think some investors are looking at Japan saying, we're getting a lot of reform, corporate reform that's important. We are seeing some positive movement with actual earnings and buybacks from Japan. I'm a little more skeptical on Japan just because I think that their economy is still so dependent on the U.S. And if we have a bumpy landing in the U.S., it's going to be hard for the Japanese equity market to decouple. But overall, I think you want to stay, I know it's very obvious, but diversified. And geography is not enough. We saw this Friday and Monday. When the stuff hits the fan, correlations go to 1. Europe, Japan, they all sell off with the U.S., so that's not enough. You have to be thinking about your assets, sub-assets, the type of securities you own. I think that still includes treasuries and gold as part of those diversifiers, even today. And one place I would look at overseas right now, which I think has gotten a little bit ignored, is the UK. Very low beta equity market. Very good, attractive valuations. And I think we'll see, for the first time in a while, we have a grown-up government that might bring some stability. And stability would be a positive improvement. So that might be one to look at as far as a defensive equity position that you can get on sale right now.
But when you look at Europe and the UK, you don't have a big tech exposure there. So you're talking about stuff, they actually make stuff and they export it to China. So there's a China risk in those markets, right?
I think more so in Europe than in the UK. If we were talking about Germany, I'd say 110%. Right. I think the UK, the sectors in the UK equity market are a little different. And I would be focusing more, frankly, right now on the UK domestic equity market, so that index specifically.
Rebecca Patterson, thank you so much for joining us.
Great to see you guys.
Just a great brief there in this, to be honest, an uncertain time. Let me be clear, Paul. VIX, 23 yesterday. We're enjoying 28. Usually, at 28, nobody's going home.
Yeah.
They're ordering pizza at 5 p.m. and they're staying through the evening. 28.05 on the VIX right now. That is pretty darn substantial, to say the least. Red on the screen, green on the screen. NASDAQ up fractionally, I guess is where I'd put it. I'm looking at the 10-year real yield. I've yet to mention it this morning. 1.81%. Credit space is actually pretty quiescent. I'm looking at a 3.96%. 2-year yield, getting out near 4%. It gets my attention. Oil, gyrating, but nevertheless, West Texas Intermediate, $75 a barrel, $78 a barrel on Brent crude.
Yeah,
so
look at that.
there's some movement there, and to this, are we sort of in betweeny here? That's how it feels.
Feels a little bit like it. We had some real volatility there Friday, certainly into Monday. A little bit of stability Tuesday. Into yesterday, but we'll see how we trade today.
We're at 1213 VIX. If we were 27.96 now, we'd be apoplectic, but we're not.
Exactly. No, we're all good.
We're all good. We're gonna,
But we need to VIX down below 20 to get your attention, Tom.
Yeah, the key technical point is a 21-ish. Don't quote me on that, but that's where I see that. We've got much more coming up. Brian Belski later on the equity markets from New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Volatility, well, that seems to be the name of the game for the markets. JPMorgan, it said it now sees a 35% chance that the U.S. economy tips into a recession by the end of this year, up from 25% at the start of last month. It also said 75% of global carry trade has now been removed. So we go to NASDAQ futures, up about 0.1%, 27 points. Dow futures down 0.1%, 51 points. S&P futures up about 3 points. We have the 2-year yield at 3.95%. That's little change. The yield on the 10-year, 3.93%, and that is down about 1 basis point. Quick check of commodities. We have spot gold higher, $2,411 an ounce. Brent crude, $78 a barrel. WTI crude, $75 a barrel. Investor Kathy Wood, well, she was busy during the stock market sell-off. She scooped up shares in Amazon, AMD, Roku, Reddit, and Meta. Wow. It all came just as her flagship fund sank to a new 2024 low. To earnings we go. Papa John's, those earnings just coming in. Adjusted earnings per share, second quarter beat estimates. Shares, though, are little changed right now. And the dating scene changing. Dating app Bumble slashed its annual revenue outlook. Shares right now down 39%. That is your Bloomberg Business Flash. Tom and Paul.
If it worked for them, it could work for you.
Okay,
I've never been on the website.
You swipe right, you swipe left. I think that's how it goes.
Bring your bar back up to where it belongs. See what's new. Bumble.
All right.
I don't know. I met my husband at the grease trucks at Rutgers.
Nice. There you go.
It worked for me.
Mr. Mateo, working it.
Joining us right now, this is just great. What a strong half hour within the tumult here. VIX 27.84, Rebecca Patterson with us, and now Priya Misra with us with JPMorgan Asset Management, a portfolio manager. And I've just got to go to your arch call of lower yields over 24 months. It's Priya Misra. Genius. Ian Lingan sat in that chair yesterday at BMO Capital Markets and said, out there we will power through 4%, well down into a 3%, and he frames out 2.95% somewhere out there distant. Do you have the same overlay, price up, yield lower, lower, lower?
I do, and here's why. I think the last week, if you didn't think that bonds and stocks were essentially negatively correlated, well, the last week shows you that they are. So, if we stay in a soft landing, the interest rates are going to fall because the Fed's going to have to cut to some normal level. We don't know what that normal is, but it's not 5.5%.
Right.
If it's 3% and the Fed's cutting all the way down to 2.5% to 3%, that 10 year is going to fall. If we actually slip into a recession, that's where risk assets are going to struggle, right. and that's when interest rates are going to fall much below that level.
Somebody said to me yesterday, they said, what's a single thing we're not talking about? And I quoted Bruce Kasman. He's an economist at a small bank down on Park Avenue. Bruce Kasman wrote a piece on global disinflation, and to me that's the heart of the matter. Fold in the China-driven global disinflation into your portfolio management.
Absolutely. So I think inflation is extremely global. We saw that on the way up. It's going to happen on the way down. I would argue markets are extremely global. But we can sort of focus on, I think, one or two things at a time. So the last week has all been about the U.S. payroll report or dollar yen. But look at globally, where is the engine of growth? I think the engine of growth was in the U.S., and now there's a question there. Are we slowing to normalizing trend levels? Are we slowing below that? I think that's still an open question. But look elsewhere, and global growth is slowing, and inflation is decelerating. So I think the market's focus, the Fed's focus has absolutely moved away from inflation. We have a CPI report, and I'm less worried about that next week than I am about, initial claims, which is showing up pretty soon.
Coming up very soon. So what should our Federal Reserve be doing? I mean, Monday morning, we had discussions of an emergency intermeeting rate cut on Monday morning early. What do you think this Fed should do in September?
So, I think they should start normalizing. We're at 5.5. Inflation is decelerating, globally. It's decelerating in the U.S. Service inflation, wage inflation is all coming down. I think they should absolutely be cutting. Where I've struggled with is this idea of gradual normalization. We know monetary policy works with a lag. So if the labor market, which Chair Powell said is back to 2019 levels, if inflation is decelerating close to that 2%, they should absolutely be cutting. I think they should be cutting fast to normal normalish levels. So 50 basis points makes sense. The intermeeting, I think the market went a little too far.
Okay.
For an intermeeting rate cut, I think you need severe financial market stress, which is going to threaten the recovery. So at that point, we're talking about either an institutional failure or markets breaking down. I think the speed of the move was interesting, but it is August. There is summer liquidity. Everyone was in the soft landing trades.
Yep.
I don't think we should get carried away about intermeeting cuts, but I think the Fed really here should be normalizing. Perhaps they should have started last week, but they can catch up quickly.
They can catch up. So what happens when a Fed begins to cut? How do they do it? Do they do it like every meeting, every other meeting, 25 basis points, 50 basis points? I can't even remember the last time we were in a cutting cycle.
So I think people look at the last cutting cycle, which is COVID, and that's where this intermeeting cut comes in. Or they look at the one before that, and the Fed's cutting really fast. I think this could be a very different cutting cycle, and fairly similar to the hiking cycle. Remember, they started, they went aggressively 75, multiple 75s, and then they slowed down. I actually think this cutting cycle might look similar. Go 50s all the way to some level of neutral, maybe it's 3%, which is where the Fed is at. Then they can slow down, and that gives them the opportunity to respond if things slow down. I think, the 150 is not going to, the market's going to focus on that dot plot. We're going to get a revised dot plot in September. Is the Fed going to talk about aggressively getting to neutral, or are they going to stay on this gradual path? And that's when the market's going to get really nervous.
I don't want to get you in trouble with Stacey Friedman and General Counsel over at JPMorgan, but I got to ask, because I think all of Global Wall Street wants to know. You killed it as a strategist, and now you're a portfolio manager. What's been the biggest surprise about being, quote unquote, a portfolio manager?
It's the correlations, which as a strategist, I could look at Excel and, have a lot of conviction on correlations. And then you live days where the correlation goes from negative to positive across asset classes. Because interest rates was hard enough. Trying to figure out interest rates and then how does that feed through across portfolios, or does it have differential impacts in different parts of credit? That's sort of what I spent.
So where's the opportunity now in those differential impacts? That's the key question.
So I think
I'm asking for Jamie. He just emailed me.
So there is opportunity. I think high quality spread product, you're locking in yields of 5.5%, 6%. But here's where, when your end of cycle cost of capital is high, this is where that research background helps. You have to look at companies, you have to look at business models. What are companies doing with debt? I think dispersion is increasing within credit. So do the work, buy high quality spread product, and buy some duration.
30 seconds. Can you frame a sub 3% 10-year yield? Not the drama of back to negative rates, but can you see price up, yield down that much?
I can. I think we're normalizing if the Fed, in terms of the economy, as of the data right now, if the Fed doesn't cut quickly enough or the lags are long, they were long on the way up, they could be long on the way down. The economy slows into recession, the Fed's cutting to 2% or below. At that point, the 10-year is going to be the only thing that investors are going to want. That's when you're going much lower in yield.
Priya, thank you so much. Priya Misra is with JP Morgan. We've been talking about the Olympics, the excitement. Jess Benton, did you know 10 fighting Texas Aggies are in the Olympics?
Nope. Really?
Yeah, it's amazing.
Well,
one of them won a
Texas
silver.
Exactly.
Very cool.
Good for them.
The Olympic Games, the Summer Games in College Station, Texas, and on Bloomberg Radio. Summer Game updates are brought to you by State Street Global Advisors. We thank State Street Global Advisors for their commitment to what we do and the excitement. It's day 13, Lisa. I saw that's day 13 of the Olympics. I'm not sure how long they go. 2 weeks? Something like that?
It goes for a while, but there's a lot. We got the track and field. They're going for the...
I just want to see like the old school, javelin.
You know what's starting Friday? Today? Friday? Breakdancing.
See, that's not an Olympic sport. I was polite to Rebecca Patterson. Synchronized swimming, I'll go there. That's I'll go there as a modern thing. But did you put the pole vault? Did you ever do it?
No, I did not. I had a friend who did it, but it is crazy. I don't know how that whole thing works.
One day I went out and said, I'm going to do the pole vault. I was like 14 or whatever, and I said,
that's not going to work.
Looked at these guys. I said, nah, it's not going to happen. Stay with us, folks, on economics, finance, investment, and international relations. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a mix of red and green in the screen. The focus shifting to jobs data. We're about 1 hour away from initial jobless claims. We have NASDAQ futures up about 13 points. Dow futures down 85 points. S&P futures down about a point. We head over to the 2-year yield, 3.95%. That's little change. The yield on the 10-year, 3.92%, and that's down 1 basis point. Have to point out Bitcoin up 4%, 57,526. Actually, cryptocurrencies ticked upward. Ripple was ordered by a U.S. court to pay a $125 million penalty, and that was just a fraction of what the SEC was looking for, so that's the reason for that. Companies making news. We have Delta, the carrier, being hit with a proposed class action lawsuit over inadequate refunds. That was following that CrowdStrike outage. Delta shares down about 0.2%. And then you have Boeing. The NTSB said it should get more surprise audits, inspections by aviation regulators. Boeing shares little changed. And finally, to earnings, we have shares of energy drink maker Monster Beverage down 7%. It missed second quarter profit estimates. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Greatly appreciate this. We're going to rip up the script here, folks. Do something we really, it's in the zeitgeist, but it's not like yen carry. OMG, what's the Fed going to do? Mm-hmm. Here's the reality, and I saw Goldman Sachs had a note out on utilities and electric generation and all that. Just out moments ago, the former president of the United States, Mr. Trump, he'll be doing a news conference at 2 p.m. at Mar-a-Lago this afternoon. Jay Hatfield's with us, who has a storied career, Morgan Stanley over to what he's doing now. And it's out of UCal Davis, where they did thermodynamics when he wasn't playing basketball. And I want to talk about the electric economy. Mm-hmm. On a thermodynamic basis, we're getting a free lunch. We're getting all this techie data centers, servers. Is Con Ed going to wire in to supply the electricity? How do you see that working?
Well, it depends on the jurisdiction. I was a utility investment banker for 15 years, so I know this pretty well.
That's why we're talking to you.
Exactly.
Guys, this is the guy.
Who grows up to want to be in a utility investment bank?
Seriously, what is Southern Company going to do down in Atlanta?
Well, it depends by jurisdiction. So in certain jurisdictions, the generation is deregulated, and in others, like Southern Company, it's owned by the utility. So I wouldn't just go run out and buy every utility just because we're going to have data center demand. But companies that own generation, like Vistra and other generators, SEG, they'll benefit. They get more demand charges. But for companies that are regulated, it can be a mixed bag because rates start to skyrocket when you build new generation. It's more expensive to build new than keep the existing.
Let me cut to the chase politically. Yeah. Are our listeners and viewers going to subsidize Microsoft's next data center?
Generally not. They'll do a wholesale power contract with an AES or a wholesale generator, so it's not really going to cost them any money. And to the extent the utility does it, it actually really subsidizes the individual consumer.
Microsoft is going to subsidize our electric bills 5-10 years
very small
out.
amount. Very small amount.
Yeah. Tom, we don't talk a lot about is preferred stock. Yeah. That's a thing.
It is.
You do preferred stocks. Talk to us about preferred stocks and why people should be thinking about preferred stocks.
Yeah, so that's actually the majority of our business. We started with an MLP fund now. We've got over $1 billion fund, PFFA. And the reason we love that asset class is it's very low defaults, but very high volatility. So it shouldn't have high volatility. So in markets like this, Fed tightening cycles, they go well below par. You can buy them below par. You're unlikely to have defaults, good public credits, and then you can gradually trade back to par. And it's a very inefficient market. It's 70% managed by index funds. We're active, so we can add a lot of value by managing the risks that are inherent in preferreds that aren't in common stocks.
Who issues preferred stocks these days? I've never done a preferred stock deal.
It's mostly financial, so it's regulated industries. Okay. Financials is also asset-intensive businesses like utilities, like REITs. And so we actually prefer those type of credits because we know the assets that are our collateral. Financials are fine as long as they're the larger financials and well capitalized.
I mean, Paul, you sent me a note today. Facebook did a deal, $10 billion.
bond deal.
Are we going to see massive capital raises by modern technology to fund the underlying electricity they need to make all the stuff we're using?
Yeah, so regulated utilities are going to issue preferreds, they're going to issue common, they're going to issue debt. The thing about utilities are the greatest credit in the United States because they're regulated, if they're regulated ones. So you really have no default risk. Like PG&E went bankrupt, but yet the bonds and the preferreds and the common survived the bankruptcy.
Would you recommend that NVIDIA do a bolt-on to a given utility to guarantee that they have
Well,
electric
NVIDIA
usage?
can issue stock at 30 times earnings, so they're mostly going to be equity financed, and it's highly cyclical.
Okay.
So most of the preferreds and bonds, for that matter, come from these old economy businesses that care a lot about cost of capital. So they have to get the right blend, whereas NVIDIA and all these tech companies can just issue common or converts and they usually carry like hundreds of billions or hundreds of millions of cash.
So, Tom, in the REIT business, they have this thing called funds flow from operations, FFO, which I think is a complete scam, but they tell me that's the thing. So talk to us about investing in REITs, because there's a lot of office buildings here in Manhattan that are empty. How's the REIT business look?
Well, I think it's a great point, because normally if somebody says don't pay attention to earnings, that's a
Right.
huge problem. So only exception might be real estate, but you're right, there's certain buildings that are depreciating quickly, and so you should look at just earnings. But the unique thing about real estate is you have appreciating land. Land does not depreciate. That normally offsets the depreciation of the building. The exception, of course, at some point, and we've talked about this before, but if you have an old building, it could be worth zero. And that's where the depreciation sort of catches up with you. That's where the FFO might have been wrong 20 years ago. And that's what we're seeing, a bifurcation in the market where people just want new buildings. They don't want to wait for their elevator. And they definitely don't want B and C buildings. Can't ask your employees to come back full time to a B and C building.
Oh, man. But I mean, Third Avenue between here and Grand Central, there's a lot of B buildings. What would you value the lipstick building, for example? What do you think buildings like that are going to trade?
Well, I haven't been in the lipstick building in a while. It used to be an A building.
Yeah.
35 years ago it was an A building. But it depends. If it's possible to renovate it at a reasonable cost, then it can be worth a lot, or convert it. But a lot of these B and C office buildings are going to be used for medical, ordinary medical type uses, and the value is going to come down by 75, 80%.
Wow. Where are you in the market right now? One final question here. I mean, with the turmoil that we've had, it screams opportunity. Where's the Jay Hatfield opportunity right now?
Well, we're actually more bullish than we've ever been.
Really?
And the reason for that is, if you recall, we had a very non-consensus call that rates would drop to 350. In the face of a lot of people focusing on the budget and the deficits. And so that was probably the most controversial call, not 6,000 on the S&P. But we've seen that monetary policy is way more important than the budget deficit. So in this, acknowledgement the Fed's going to probably cut 3 times this year, we've seen rates go to 380, which implies that our 350 target is reachable.
Right.
And if we are at 350, we're out of this August, September freak-out period, then we see a fourth quarter rally to our 6,000 target.
Wow. How about that?
I'm hearing this. This is percolating.
Single best idea
as well.
right there.
Within that idea, and we mentioned this with Rebecca Patterson and Priya Misra, is the idea of an overlay of disinflation. I would suggest in the zeitgeist right now, nobody sees coming the kind of disinflation that, say, someone like Bruce Kasman at JPMorgan's talking about. Nobody sees that coming. Do you agree?
Right. I think most people don't have a good model for forecasting inflation. We have a simple one. The money supply, we talked about it before, M0, not
Right.
M1, and energy prices. That caused over 100% of the inflation in the 70s. And if you use those two factors, you would have called this cycle nearly perfectly, as we did.
Right.
And you would be the opposite of the Fed. So based on the money supply, it grew 3% this year, so below nominal GDP. Oil prices are down. Natural gas prices are down 33%.
So there you see the
We're very
dampening.
bullish on inflation, but not deflation right now.
Jay Hatfield, thank you so much. Thermodynamics and electric utilities, greatly appreciated. Infrastructure, capital management. Red and green on the screen right now. I'm watching the VIX carefully at 28 level into 27.83 to review 16 out to 60. Into 22-ish, 23 yesterday, and then a little bit of upset yesterday afternoon, 27.81 right now on the VIX, so that moves forward. Futures, they're giving me no love this morning, up 1. We are less than 1 hour away from the Thursday claims data. Ian Lingen looking at the 4-week moving average. We'll talk about that in a bit. With our news in New York City, John Tucker.
All right, Tom and Paul, Austrian security officials say that the main suspect of the two arrested in a foiled plot to attack the now-canceled Taylor Swift shows in Vienna has fully confessed to his plans to kill as many people as possible outside the concert venue. Officials telling reporters at a press conference in the Austrian capital this morning they found ties to the Islamic State group, and when the 19-year-old began working on his attack plans back in July, he quit his regular job and conspicuously changed his appearance and adapted to Islamic State propaganda. Kamala Harris and Tim Walz making a Midwest swing this week with J.D. Vance visiting some of the same states. Bloomberg's Ed Baxter has more.
For Harris and Walz beginning in Michigan and Wisconsin, Harris calling them happy warriors.
Do we want to live in a country of freedom, of compassion, of rule of law?
Walz going directly after Trump.
He mocks our laws. He sows chaos and division amongst the people.
And J.D. Vance defending the name-calling.
Look, I think the president, obviously, he loves to give people nicknames.
And Trump on Fox.
There's never been a ticket like this. This is a ticket that would want this country to go communist immediately, if not sooner.
Just the beginning form of what we can expect into November. Ed Baxter, Bloomberg Radio.
Meantime, Donald Trump has scheduled a news conference this afternoon in Florida. Tropical storm Debbie making landfall again this morning, even as residents of the South deal with Debbie's initial blow.
Everything in the house is underwater, appliances, beds, everything. We just didn't have time to get it out. It came in too quick.
Debbie came ashore near Bowles Bay, South Carolina. Heavy rain and possible flooding is possible all the way up through the mid-Atlantic and northeast by the weekend. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paula and Tom.
Team surveillance Olympic coverage. Catherine Greifeld in Paris.
Is she?
Always excited about that right now. Let's go to the competency, the depth of our analysis.
In sports, the Paris Games, the U.S. women's basketball crushes Nigeria on their way to the semifinals. The men face Siberia this afternoon. That is Serbia. You know, Paul, in the over 30 years that I have been here at Bloomberg World Headquarters, I have never seen Tom Keene laugh so hard as when I gave the Siberian sports team update. No, of course, we were talking about Serbia. But I'm sure Siberia fields a great team.
I'm sure they do.
The Siberian synchronized swim team is just killing it as well. John Tucker, I can't find words, folks, for the sausage that is made at 3 a.m. as we coalesce all of our global coverage into giving it to you as tight as we can as you wake up and say, what was happening while we were asleep? And within that, you get, I'm the worst offender of this. You get this confusion over Slovakia or Slovenia or Serbia or Siberia at the Summer Winter Olympics.
It's very simple. It comes down to making sure you clean your glasses when you arrive before 3 a.m.
John Tucker with the Hall of Fame Bloomberg Radio moment there. Red and green on the screen right now. VIX 22 out to 27 off of yesterday's angst. Gold's a solid 2,448, Paul. Up $16.
It's had a nice run. We'll take it there for our bullion.
Yeah. Currency markets churning here. The yen, important, 146.12. From New York City, Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, a mix of red and green on the screen. We have NASDAQ futures down up about 0.1% or 30 points. We have Dow futures down 0.1%, 46 points. S&P futures up 0.1% or 5 points. The 2-year yield at 3.98%. That's up 1 basis point. And the 10-year yield at 3.94%. And that is little changed. Commodity spot gold higher, $2,410 an ounce. We have Brent crude is $78 a barrel. WTI crude, $75 a barrel. To earnings we go. Sportswear maker Under Armour up 9%. Fiscal first quarter revenue topped estimate. It also lifted its full year profit outlook. Then we go to Restaurant Brands International. That's the owner of Burger King, Popeyes, Tim Hortons. Their shares down 2%. Sales grew less than expected the second quarter. I mean, we just heard the same thing not too long ago from Taco Bell owner Yum Brands. You remember that? And here's something interesting. Dine Brands. It says wealthier Americans, they're visiting IHOP and Applebee's restaurants more often. It said it had a drop in visits from lower income customers recent quarters and an increase in guests from households that make about $100,000 a year or more. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Paul, we're going to touch on this a couple times here. And I don't want to turn this into, Whitefield-Sandy accounting lesson, but Warner Brothers discovered yesterday with a $9 billion write-down of their bad will. And I'm looking, Goldman Sachs, Michael Ng on the sell side, a neutral with a target price of $7.50. I'm enjoying $6.85 now on the train wreck.
$9 billion write-down, Tom, for a company that has a market cap of $19 billion. So almost half the company here they wrote down. And this is the core of the Warner Brothers Discovery business, is their cable network business. This is a business that used to be a phenomenal business because you had 2 revenue streams, advertising and affiliate fees. And everybody's cutting the cord, Tom, and that's the story.
Brian Kraft goes the other way. You got to believe, Paul, with a breakup here at Deutsche Bank, Brian Kraft says $15 target price.
Yeah, Brian's an excellent analyst, but I don't. I was just going back and forth with Matt Miller. I don't know what the solution is.
You break it up. I mean, that's how you get to $15.
I don't know who buys it. I don't know who buys any of it.
I don't know. Well, there it is, and we'll have much more on this. It's really, we're interested in it with CNN and all that, but still, there it is.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages, the Lisa Mateo Hour. It's brought to you by Interactive Brokers, their portfolio analyst. Consolidate, analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free. PA, tell me we're Bumble free on the newspaper.
We are Bumble free, but we're not Costco free. It's about Costco. You know, I had to go and start there. Okay, they are cracking down on the membership sharing, kind of like Netflix is doing the same thing. The problem is that too many people are sharing it. They're going into, I don't know if either of you have been to a Costco, but when you go in, there's someone at the door who checks your ID. But the picture is really small. They can't see it. They just, wave you and just go in. I wipe my app and they just say, yeah, sure, go ahead.
So you're a member.
So I'm a member.
Yeah.
So what they're starting to do is they're having these ID scanners so that when you go in now, what's going to happen is that you scan it and it comes up on this bigger screen so they can actually see the picture and say, oh, yeah, that's you.
Is that a thing? I mean, are people really doing that?
People are really doing that. They're just, all they're doing, because they don't really look at
What's
it.
What's a Costco membership?
I have the higher version.
Of course you do.
Well, I'm shocked.
Yeah.
That's about $130. The fees are going up in September.
Right.
And is that
first
worth
time
it for
in
you?
7 years. For me, it's worth it because you get 1% back. So at the end of the year, I get a check that basically pays for that.
It nice? Is it the same as the magic it was like in Red 2 when Mary Louise Parker's in there? And, John Malkovich is in there like an aisle 4 with the Kirkland toilet paper. And that is Costco the same as it was when Bruce Willis made that great movie?
I think, hey, the hot dog price is still the same.
The hot dog's not the same.
All right. Very good.
But the Kirkland item is not as well. Next.
So, yeah, they're cracking down on that. Okay, a new report shows the pandemic shifted U.S. jobs away from big cities into smaller metros. So I'm going to break this down for you. This is from the Federal Reserve Bank of New York analysis. Job listings. Large central metro areas now count for about 38% of total listings nationwide. That's down from 46% pre-pandemic. And the portion of job openings in smaller metros, that increased. There's also a shift in the type of jobs. You have postings for jobs related to computers, math, that fell. And then job listings in healthcare, that rose. And they're saying, why? Well, what's the reason behind? Well, it's remote work, okay? People are moving away from the big cities because they can work remotely from wherever. And as they start to relocate, then you have people who are needed for, let's say, food workers, healthcare, other services. So that's the reason.
Paul, you're more up to speed on this. I'm thunderstruck by how empty the streets of New York are at selected times. It's like embedded now. Can we say work from home?
I think so.
Is embedded?
I think it is.
Full disclosure, Paul and I think this is nuts, but
no, I think you're right, Tom. I think you're right. I think, and again, I just think about my own offspring. It's part of their. That's just how they view the workforce as a hybrid kind of environment. That's where we are.
Are they doing the hybrid? Or mostly
yes. Even like Fidelity. My son works at Fidelity. Hybrid. Okay. Universal Music Group, kind of hybrid.
It's un-American. Peter Lynch was never a hybrid.
I tell you what is the defense contractors my son works for, not hybrid.
Is Bumble work from home?
Bumble's work from home. Okay, we've been talking about the River Seine, right? And if the water is safe, if it's not safe, as they get ready to start the swim. I think the women start today.
Good luck to them.
So there's something going around that the swimmers are drinking a can of Coke. That is the secret to not getting sick after you get into the water. There's reasons behind this, okay? It's not proven, just want to put that out there. There's no medical evidence for this whatsoever, but they say they're fans of it. The reason is because the acidity works as this like quasi-bleach for your digestive tract. Nice. So you don't get sick that way. I mean, think of it. If you take a can of Coke and you pour it down your drain, it clears it out.
Is this, wait a minute. Is this plus for Atlanta or minus for Atlanta? Which is this?
Well, I mean, after a big night out, so many days I've said, there's nothing better in this world than Coca-Cola.
Really?
Oh, my God. It just revives you like nothing else in the world.
But the athletes like it because of that sugar rush too, because it returns like those glycogen levels that they lose.
Now, do you have Coca-Cola in the Mateo household?
Never, no.
I mean, again, reason number like 3,000. I'm never going into the Mateo household. No Coca-Cola.
Sorry. Too much sugar.
Lisa Mateo, thank you. Lisa Mateo with the newspapers today. Thank you so much.
Oh wait, there's one more time.
Oh, one more. Excuse me.
We have video to go with this.
Tie a bow on it. Next.
This one. Okay, we have the video. There were these dogs. There's video of the dogs in the house, and what happens is that make sure you keep vet, bill, and kennel fee away from your cell phone battery pack, okay? Because you see the dog, he's biting on it, he's chewing on it. If you're watching on YouTube, you can watch along with us, and all of a sudden, it starts to spark up. Oh, and he jumps off the bed, and it bursts into flames because he's on his pet bed. So the other dog runs for the hills, and now he's saying, "What are you, an idiot? What were you doing, dog?" So the two dogs and the cat scooch out the dog door. They're saved. No one's hurt. That's the main idea here of this story. But the lesson learned is these things can be kind of dangerous.
Well, it's serious. John Tucker's really led on this. I think John's done some great reporting on it. I'm sorry he's not here. He's looking at Siberian Olympic outtakes. But Paul, I'm sorry. For Mayor Adams in New York City, there's no more serious issue.
The FDNY, Tom, the FDNY will tell you this is a huge issue for them. It puts their firefighters at risk. And I learned this a long time ago with my oldest son, who was into all those battery packs for his various RV vehicles. And he would store them out in the garage. He would never bring them to home, put them in these special wraps and special containers because he was trying to explain how.
Right.
And sure enough.
Okay. I'm not good at this. Scary. Does a Vespa have a lithium battery?
No, it does not. We are gasoline powered, baby.
Okay, there we go. Safety on the Jersey shores. Exactly. Lisa Mateo, thank you so much for the newspapers this morning. The VIX, 27.57. That's what everybody's following within the equity market. We'll talk to, among others, Brian Belski, I believe, is scheduled to be with us. The real yield, I'm looking at the U.S. 10-year real yield, 1.82%, elevated up a little bit. Is the sun, when do we look for the sun?
Saturday. just in time.
Sure, we need more Sheryl Crow.
Yes.
It's never cloudy for Sheryl
No, of
Crow.
course not.
Bloomberg Surveillance, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, John Tucker in for Michael Barr. Lisa Mateo survived our newspaper segment. She's with us as well. An important data check here coming up here. 1 day, 2 days, 3 days beyond, and it claims in 29 minutes, widely anticipated. I don't have it in front of me. I'll get it up in a moment. But Paul Sweeney, Ian Lincoln at BMO Capital Markets really bracketing the importance of this to the 4-week moving average. It's weekly data. And he takes it out to a 4-week moving average.
He does, absolutely. And I think that's what a lot of folks are telling us to do here. Initial jobless claims, the expectation is for 240,000, a little bit higher than what we've seen recently, although the prior period was 249,000. So we'll keep an eye on that, Tom, 8:30 Wall Street.
Terrific lineup. Let me get it over here. One of the interns brought me in a list here. The Sarah Wolf to join us here on the American economy, working with Ellen Zentner, Morgan Stanley, Brian Belski in the 9 o'clock hour. Celia Mosher, this is an important conversation at 9:45 on the politics of the moment in Washington. Program note, the former president of the United States, Donald Trump, in a press conference. Rich, help me, Eric, help me with the time. 2 o'clock. It's like Churchill and Nixon, 2 o'clock. 2 o'clock, and we will take that across all of the Bloomberg radio platforms, including YouTube. We are in the Interactive Broker Studios with our Bloomberg Business Flash, Lisa Mateo.
And we've got red and green on the screen. The focus kind of shifting back to U.S. economic data. Today, we're going to get more into it. We have initial jobless claim for last week. That's about a half hour from now. We'll get to NASDAQ futures, up about 0.1%, 23 points. Dow futures down 0.1%, 37 points. S&P futures up 0.1%, or 5 points. We have the 2-year yield at 3.97%, and that's little changed. The 10-year yield at 3.93%, and that is little changed as well. Check look at currencies. Japanese yen up about 0.2% at 146.26 against the dollar. And then we'll check in with the Nikkei right now, down about 0.7%. To earnings we go. Warner Brothers Discovery now down 9%. It posted a nearly $10 billion quarterly loss, mostly due to that write-down of the value of its cable networks. You have Eli Lilly up now 11%. The company lifted 2024 sales outlook for that second time this year, and that was thanks to the strength of its weight loss drug Zepbound. It's the opposite, Novo Nordisk, who said sales of its weight loss drug Wegovy disappointed. So you see the difference there. Novo Nordisk checking in with them, their ADRs battling back. They're now up about 5%. And finally, Krispy Kreme logged a second quarter loss while sales climb. Those shares up 2%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. The 10-year real yield I'm watching elevated off of the, I'll call it gloom of Monday, 1.82%. How are we doing, Rich? I'm Mr. Trennert. Have we wired everything up there? Very good. Joining us now, Jason Trennert, Chief Investment Strategist, which is just a title. What you need to know is this is the guy that linked economics into newsletters and research notes that have an equity call. Jason, you look at the economic moment that we're in. How do you fold that over into my need to own blue chip stocks?
Yeah, I think, Tom, the good news, I think, especially given the volatility that you saw last week and earlier this week, is that I think it's really difficult to make the claim that we're close to a hard landing. I think if you look at the Atlanta GDP now statistics, that's showing you decent, if not pretty good growth in GDP. Also, if you look at just earnings in the second quarter, it looked like they're up about 11.5 to 12%. So I think some of the hard landing calls are premature. I do think there is a delayed impact of Fed tightening. Even though the Fed is about to ease, it seems to me that we are dealing with a different regime. And I think all of that accrues well for high quality stocks. And we say companies that are not dependent upon the kindness of strangers to grow. In the QE period, which was pretty much uninterrupted for 12 or 13 years, you could capitalize a ham sandwich. You didn't really need much in the way of cash flows or earnings.
Is that Jason Trennert commenting on Warner Brothers Discovery? I think it is.
But now it's a bit different. It is a different regime. I think the great moderation is over. I think inflationary pressures are likely going to stay elevated and back really to more normal levels. 2% is really never a normal level. It's always a goal, aspirational goal. So the good news is I still think there are stocks to buy. I guess if there's bad news, I don't think it's a blanket buy of all stocks in the market. There's still about a little more than 40% of the companies in the Russell 2000 that haven't had a profit in the last 12 months. And so, in my opinion, you want to be really careful on the more speculative aspects of the market.
Jason, are you suggesting your clients still try to buy some of these Magnificent Seven stocks on dips, or do we go to other parts of the market to look for value?
Listen, I think those are very difficult. The first thing I'd say is I wouldn't short those companies if you put a gun to my head. Okay, so and I also, for the long-only investor, the professional investor, it's hard to even be underweight them, given the fact that they are extremely high-quality companies, right? You're talking about companies that don't need the kindness of strangers to grow. They generate tons of cash flow. In many cases, they're quasi-monopolies. But in my opinion, there's probably more juice left in other parts of the market at this point. I do think that there is a reevaluation of the AI trade. I don't think anyone disagrees with the idea that AI is a very significant, meaningful change that will propel growth for a long period of time. The question is it fully reflected in the stocks right now? And my inclination is to say a lot of it is, that you're now a little bit more in the show me stage. The initial stage was a lot of the kind of gold rush approach to this, where you want to be there, you want to buy the guys that sell the picks and the shovels. I think now you're going to want to see more evidence of real value being created from AI for the next leg in the stocks. And so in the intermediate term, long-winded answer to your question, I would look for other parts of the market to sustain the market's upward trajectory. And I think that would be very helpful to a very, very healthy as well.
So how about this rotation trade that we saw several weeks ago? Again, we saw the Russell 2000, for example, outperform the S&P pretty consistently for several weeks there. Is that something that has legs for you? I mean, whether it be small caps or mid caps or just something other than the Magnificent Seven? Yeah,
listen, I think I'd be careful on the small caps unless again they're high quality. As I mentioned before, you still have 40% of the companies in the Russell 2000 that haven't earned a profit, and so generally speaking, the best time to buy small caps is when you're coming out of recession. And I'm of the view that we haven't completely outlawed business cycles. And I think you're sooner or later you will have a business cycle, and it's hard, in my opinion, to really leg into small caps at this stage in the cycle, which looks pretty late to me. It doesn't look particularly early to me. Now, maybe a very shallow recession because the Fed has done such a good job so far of prophylactically heading off a hard landing. But I would stick more with quality, and I don't know if I would bite completely on the small cap rotation.
Okay, what I'd recommend, folks, is we protect the copyright of our guests. The strategist note is outstanding. Send a dozen Olivia cigars to Jason, and maybe he'll send you their research note. Market timing is tough, both up and down. Mr. Trennert, you absolutely nail the madness of go to cash. Discuss.
Yeah, I think, listen, a lot of everyone dusts off these charts. Every time you have a market correction, everyone dusts off the charts. of missing what it would cost you to miss the 5 best days, the 10 best days, the 20 best days. What is often missing from that analysis is, what would it save you if you missed the 5 worst days, or the 10 worst days, or 20 worst days? What we show you is that on both sides, it costs you to miss those days, right? Or not be in there. The bottom line, though, is since 1928, you've had about 53% of the days the market's been up, and about 46% the market's been down. So that argues pretty strenuously that you want to be invested, you want to be long, and that's not even really kind of keeping into context the tax implications of selling and trading. I think market timing is very difficult, even for professionals. In my career, 35 years, I haven't seen too many people that are good at that, even among the professional class. There's a handful. It's certainly very difficult for anyone kind of playing at home. It seems to me it is just too complex a market to do that, and whatever gains you might have would probably be worn away either by taxes or trading commissions. So the best thing to do longer term is, it's boring, it's cliche, is to stick with long-term companies, and as Warren Buffett said, my favorite holding period is forever.
Jason, I'm going to leave it there. Jason Trennert, thank you so much. I can't say enough about that advice. We'll feature that on the Single Best Idea podcast today. He is with and is Strategist. Futures up 4 with our news in New York City. John Tucker.
All right, Tom and Paul. Authorities now say an alleged attacker detained by Austrian police had been planning to attack concertgoers at Taylor Swift's show in Vienna with homemade explosives and knives. Police say the 19-year-old Austrian citizen had likely planned the attacks alone, but was in contact with 2 minors, including a person who was slated to work at the concert. They say the suspect has made a confession, and all others allegedly involved in the plot, they have been detained. Democrats Kamala Harris and Tim Walz warned that former President Trump would overturn the Affordable Care Act and gut Social Security if he returns to the White House. And Bloomberg government's Jack Fitzpatrick has more on the Democrats' economic message as their campaign moves through the industrial heartland.
He is worth less than $1 million. He does not own stocks. That is something he has talked about before. He pushed for tighter disclosures on congressional stock trading. And he is less wealthy than the other people in the race, which is consistent with his background and his politics, although maybe it will change if he ends up winning and becoming vice president.
Bloomberg government's Jack Fitzpatrick talking about Tim Walz there. Meantime, Donald Trump has scheduled a news conference for this afternoon at Mar-a-Lago. Russia declared a state of emergency in a western region as Ukraine's military launched what appeared to be its biggest incursion into Russian territory since the Kremlin's war began more than 2 years ago. And the head of the National Transportation Safety Board says aviation regulators should now conduct more surprise audits and inspections at Boeing's factories to get an unvarnished look at its manufacturing processes. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul, Tom.
What are they writing down, Paul Sweeney, when a media company writes down something? Are they writing down "I Love Lucy" reruns, or
all the goodwill on their balance sheet from these intangible assets that they have? When you buy a studio, you buy a network, all that kind of, it's intangible assets there. So, but it's the value of I guess just the networks per se. I mean, again, that's half the company's market cap in one fell swoop. I mean, it just goes to show you what all these media companies, particularly those that are over-levered, like Warner Brothers Discovery, have to deal with here. So as they try to make this transition to the streaming business from what was a phenomenal business for 50 or 60 years where everybody made money.
And the NBA plays in it. Rich Greenfield leads with that, with his analysis at Lightshed. And he says Warner Brothers Discovery has repeatedly stated they've licensed, NBA. How do we reconcile that this on the NBA and Warner Brothers? Fascinating. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stock futures fluctuating. Traders getting ready for a reading on jobless claims for clues on whether the Fed's policy cooling the labor market too much. That comes out about 15 minutes from now. JPMorgan says it now sees a 35% chance that the U.S. economy tips into a recession by the end of the year. That's up from 25% as of the start of last month. Now, it also said 75% of the global carry trade has now been removed. Let's get to futures right now. We have NASDAQ futures up about 0.1%, 23 points. Dow futures down 0.1%, 41 points. We have S&P futures up 0.1% or 5 points. As far as the bond market, the 2-year yield at 3.95%. That's little change. And the 10-year yield at 3.92%. And that is down about 1 basis point. We head over to commodities. We have spot gold higher, $2,413 an ounce. Brent crude, $78 a barrel. WTI crude, $75 a barrel. Moving the markets, well, that would be Bumble. Slashed its annual revenue. Hold on, BMBL. Here we go. Sorry, getting to it right now. Those shares, they are down this morning, and they're falling right now 39%. Sportswear maker Under Armour, they're up 9%. Fiscal first quarter revenue topped estimates, also lifted its full year profit outlook, so that's doing a little bit better. And then shares of drive-through coffee chain Dutch Brothers, they're down and lower this morning. It tempered its store growth outlook. You never been to one.
Where are they?
They're not around here, I'll tell you that much.
Good morning to all of you.
It's your Bloomberg Business Flash.
Lisa Mateo, thanks so much.
It's based in Grants. It's based in Grants Pass, Oregon. Has 24,000 employees.
So they have real coffee.
I guess.
It's on the edge.
That's how they do it out there.
Is Dunkin' Donuts in Oregon? That's a good question.
I can't believe.
It's
got to be Boston, right?
Krispy Kreme is everywhere.
Yeah.
Joining us now, and this is actually a really important conversation. First, though, on the Summer Games, the Olympics here, day 13, with great coverage. Thank you, State Street. Summer Games updates, they're brought to you by State Street, Global Advisors. Constance Hunter joins now, Senior Advisor, Macro Policy Perspectives. Here, 15 minutes to the claims statistic. You know, there's all these distractions, Constance, but it is about the American economy, which is 70% the consumer. How's the consumer doing?
Well, it's not monolithic, right? I mean, we have different consumers. So, I mean, if we look at, revolving credit card balances or credit card balances in general, they're only up 1.8%. They've been falling from a peak. That's generally a recessionary sign. Yet on the other hand, we look at consumption in the second quarter, and yes, that's rear view mirror, but there is some path dependency there. And we saw a stronger consumer in the second quarter. So, it really depends on which quintile of income you fall in. Obviously, the lower quintiles are more rate sensitive. And so what the Fed does really matters here with regard to the health of the consumer.
How far is Jerome Powell from John Taylor of Stanford? If you run the Constance Hunter Taylor rule, talk about mathiness. How far are we from a rule?
Well, John Taylor sort of in a weird way has disavowed that rule, but we would be easing, right? We'd be taking rates down to 2.5%, 3% here, the Fed funds. Wow. And so it is important, I think, that the Fed begins its cutting cycle, that it starts jawboning and what we call moral suasion, that they start talking about the path of rate cuts. The tricky part for the Fed is that the data is conflicted, right? We're seeing very conflicting data. So we saw a really poor ISM manufacturing, but a slightly stronger services ISM. And so this is what happens at turning points and inflection points in the economy. The data comes in mixed. And so the Fed has a lot of policy space here. We're still in the midst of a pretty substantial productivity burst. And in order to keep that going, which is sort of the key to really having significant growth with runway, the Fed really needs to start cutting in September, which everybody believes they will. And the question is it 50 or 25 basis points? And what do they telegraph with regard to how far they're going to go?
So, Constance, I mean, there are a lot of folks out there that say the Fed is actually already behind the curve, that the real-time economic data suggests that inflation has been tamed and that growth is, in fact, slowing to the point where they need to cut. What do you say to those folks?
Well, I am one of those folks.
There you go.
I think the Fed is behind the curve. On the other hand, it's sort of the Fed's job to be a little bit behind the curve because from a risk management perspective, you'd rather be slightly behind the curve and absolutely correct than ahead of the curve and wrong, right? The blowback of being wrong for being ahead of the curve is much worse than the blowback for being behind the curve. And even being behind the curve, the Fed has the policy space to basically get away with the worst case a soft patch.
But do you see any presidents or governors or senior officers walking away from an ex-post strategy? I don't see it. I don't see one single word of ex-ante courage.
You bring up a great point, and it'll be I think all eyes are going to be on Fed's the Chair Powell's speech at the Jackson Hole meeting or conference, right? That's going to be a very, very watched speech. It always is. And look, they can jawbone into this, but they've always said they're data dependent, right? And unfortunately, when the data is mixed, it makes their job a little bit harder. On the other hand, we know that equilibrium is a mythical beast, right? It doesn't really exist. If it exists for a moment in time. So for Chair Powell to say, okay, we're looking at sort of balanced risks here, they're not going to stay balanced. They're going to start tilting towards lower growth if they haven't already. And so it's incumbent upon the Fed now to start to move, and I would say 50 basis points is warranted. They may only do 25, but I think given the economic situation and to keep the soft landing on track, they need to do 50 basis points.
Constance, do you think the soft landing is still on track? Because, boy, Monday morning, there were the market seemed to suggest not so much.
Well, I don't know about that. I mean, the stock market's not the economy, and we had a confluence of factors, right? We had sort of the Bank of Japan getting a little out over its skis. And remember, when the Bank of Japan acted, they hadn't seen the data on Friday, the payroll data on Friday, just like the Fed hadn't. We saw the Bank of Japan governor come out and sort of say, oh, it's okay, we're not going to do more here, right? And so we had I think stock market very overvalued in the U.S. You had this yen carry trade unwind, having some feedback loop effects into the bad data. The bad data, of course, exacerbated that. And of course, we had the Bank of Japan and the Fed moving in opposite directions. So I'm not sure that Monday's action was the economy, right? I think Monday's action was the stock market has been poised for Fed cuts, soft landing. And was like, ooh, wait, this might be a bumpier landing than we expected.
Yeah, Constance, we now begin our coverage of Jackson Hole. We do this with Constance Hunter of Macro Policy Perspectives. Ms. Hunter, how long will Jerome Powell's speech be?
How long will it be? Well, having attended Jackson Hole several times, I would say it's going to be about 20, 25 minutes.
Oh, that's a long speech for Jerome Powell.
It's a long speech.
Maybe you and Lisa 15, will be there, so I'm expecting 15. Full coverage.
Maybe 15 minutes.
The time, Constance, where he went 8 minutes was hilarious. We were all on coffee breaks. I was having a Coors 3-2 beer, and all of a sudden, Powell stops talking. Constance Hunter, thank you so much with Macro Policy Perspectives. I'll be there with Bramo.
That's going to be big.
You should see Bramo.
So where do you guys go? Now, you're going to go to... What's the place you guys go to?
We go to Jackson Hole, the lodge.
Yeah.
And, we're like it's like the little
what's
lodges.
The restaurant with the saddle?
Yeah, $1 million cowboy.
There you go. I need a picture of Lisa Abramowitz there. You got to get
that.
They
They got a brass plaque there for where I go there. Good morning to all of you in Wyoming. Really looking forward to that trek out there. Different this year because we got the Chicago Democratic soiree happening at the same time as well. So huge news flow into that, I think, third week of August. Right now, red and green on the screen. VIX 27.67. Petroleum, $78 on Brent, $75 West Texas. Intermediate. Dollar churning is where I'll put it. The yen, 145.99. Claims next. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are just moments away from initial jobless claims for last week. Ahead of it, I want to check in with futures. We have NASDAQ futures, little changed, up about 16 points. We have Dow futures. They're down about 28 points. S&P futures, well, they're up about 3 points right now. The 2-year yield, 3.95%. That's a little change. And the 10-year yield at 3.95%, and that's up 1 basis point. And the numbers are coming in. The survey was for 240,000, coming in at 233,000, Tom, so a little bit lower than expected.
A little bit lower, looking for the revision as well. Ian Lingen with a benchmark this morning, looking for a 4-week moving average to 40-ish is where I'll put that. So we're a little bit underneath a modeled 4-week moving average. Again, I'm waiting for the revision. It comes up here a little bit slower, but certainly a constructive report with green on the screen. Markets, they're not spiking, Rich. They're lifting.
They're definitely spiking.
Spiking is like a 3% move. You know, spiking is like the New York Knicks. They're up 42 points there. The revision's pretty much on target as well. Futures up 38. Dow futures up 151. The VIX doesn't give me any love. In the bond market, the Sweeney yield over 4%. How about that?
Hello.
Talk about round trip. That's actually important. Up 5 big basis points there. The Fed parlor game will change here. 10-year yield up 2 basis points. That real yield with a 170-ish handle now 1.85. So there's a quiescent return to the market. Let's bring it over to the carry trade, which I'm not sure where that folds in. 146.79. On dollar yen. Our economic data, and of course important economic data next week with PPI and CPI and EIEIO. The economic data always brought to you by Commonwealth, our economic indicators. Thank you, Commonwealth. They join over 2,000 independent financial advisors who are taking control of their growth. With advisor-centric support and future-ready technologies, grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. As Paul mentioned, Sarah Wolf briefs now with Morgan Stanley on the claims statistic, but also the view forward. Sarah, what's the biggest mystery? When I have such great respect for the conferences that you have at Morgan Stanley where you argue, what's the number one thing you're arguing about with Ellen Zentner now at Morgan Stanley?
Of course, the hard versus soft landing debate. Are we seeing a real deterioration in the labor market, or are things just cooling off in line? I think at this point, markets are holding on to any type of data that's going to push the labor market view one way or the other. I think the initial jobless claims data gives a little bit of a breath of fresh air that maybe things aren't starting to inflect. Our view, though, is that the labor market is okay. It's slowing, but nothing is looking out of the ordinary. 1 week payroll print is not enough to extrapolate forward. But this is really what we're going around in circles at MS Research.
The arch call of 18 months is the good, the bad, the ugly. Everybody has misjudged the resiliency of American GDP. I got Atlanta GDP now, a snapshot at 2.89%. That's solid economic growth. Are we still in a regime where we're underestimating the power of the American consumer?
So if we take a look at what's going on with the consumer, real consumer spending is still running very steady. We're basically tracking just a touch above 2% real PCE growth this year. Last year was 2.2%. And so we're not really seeing that overblown deterioration in consumption like what people are worried about, like what they're trying to extrapolate from company earnings onto the actual economic data. Things are looking okay. And for context, consumer spending ran at about 2.5% in the 2015 to 2019 period. So that is slow relative to that period, but we're also pretty late into this tightening cycle. And so 2% is decent consumption. I do think, though, that, where some of the worries are coming from is the slowdown that we've got in other parts of the economy. But, we've been arguing that there's a lot more cushion, especially among the household sector, which is 70% of GDP, and that's going to keep us afloat. The last thing I'll just note is nominal consumption. That's where the big slowdown has been. And I think that's where a lot of the fears are coming from on the health of the consumer. So while real PCE is running basically in line with last year, 2-ish%, nominal was over 6% last year. And this year it's tracking 4.5%. That's 150 basis point slowdown in growth. And I think that's what we're seeing in the companies where they're losing pricing power. Inflation's coming down. It's good for the economy, good for the Fed, bad for companies.
So, Sarah, fortunately, I am on the Morgan Stanley research distribution list. But boy, you guys publish a lot of stuff every day. Can you summarize for us kind of what's the Morgan Stanley just GDP call for the U.S. for this year and next? I mean, how much slowdown are we going to see?
We're looking for just a touch above 2% GDP growth this year. So it is quite a bit of a slowdown from last year where we were running basically 3% real GDP growth. But that's healthy slowing. And if I actually look back to when we put our mid-year outlook out back in May, when people were really bullish about the economic outlook, we are tracking on the dot in line with our GDP forecast for the year of just over 2%. So things are slowing down, but it's really coming in almost on the dot in line with our forecast. And we don't have an inflection in GDP growth until 2025 off of lower interest rate, pickup in housing activity, pickup in household buying power. And so you really just need to kind of wait out the slowdown until the Fed could re-stimulate the economy.
You've got, and you know, when someone sends you a 36-page deck, you run. Sarah, I'm looking at your deck here. As Paul mentions, you guys publish really a lot of great benefit to us. PCE price index a year out, sub 2%, 1.9%. How far behind is the Fed?
We don't think that the Fed is too far behind. I mean, we think it's appropriate for them to cut in September. And the part of that is because we don't expect this hard landing. We expect that they can be patient with the labor market and economic activity, and that they needed to wait for inflation to look sustainable. And the reality is, after the first quarter reacceleration in inflation, everybody was freaked out. Markets were pricing in one cut for the year for quite a long time. And so there wasn't really much the Fed could do before the start of the summer because they didn't have the data. And now we have 2 or 3 months of good data now, which is they made it very clear that they needed a string of sequential good inflation prints, and we've just gotten that. So they really weren't in a position to react sooner than September, especially given how strong the labor market was and labor market is still and economic activity.
So going to that labor market, Sarah, I mean, we got spooked a little bit on Friday. What was your view of the Friday jobs number?
The data is so volatile right now. This is not the first time we've gotten a close to 100,000 print on payrolls over the last year. It's happened a couple of other times just to be reversed out in the coming months. So we're very careful to extrapolate forward these 100K payrolls into the rest of the year because the data is so volatile. The other thing to keep in mind is the unemployment rate. Everybody's really alarmed about the Sahm rule. We've, urged people to look at employment to population ratios instead of the unemployment rate because we're getting this surge in labor supply, and it's not as much of coming from a decline in labor demand. And so if you look at the EPOP ratio, that's only risen about 30 basis points over the last 12 months compared to the Sahm rule, which reflects the unemployment rate has risen a greater 50 basis points. But a lot of that extra 20 basis points being driven by labor supply, labor force participation rate.
Sarah, thank you so much. Sarah Wolf with Morgan Stanley this morning. Need to do a data check here. Markets are moving. VIX in by 2 full points, 2
Still not there for you, Tom.
25.87. It's come in nicely, green on the screen, much like yesterday before we gave it up. Futures up 48, Dow futures up 147.
I blame Carol Massar for that. I mean, we
it is true.
Carol and Tim.
Do you see when she gets in? It's un-American.
Well, it's her whole entourage procedure.
I think she does. She's the only one. Carol Massar is the only one I know who does work from office and does work from home in the same day.
No, nobody works harder.
It's incredible how she does it. The Sweeney yield, 4.02%. I think this has been underplayed.
Yeah.
The yields are normalizing. And you get spreads. Good morning. We're on YouTube. I haven't said this. We got a whole new thrust. We are thunderstruck by the international viewership on YouTube. I did not expect this. I'm ignorant on this, and I'm learning every day. We say good morning across the Pacific Rim. In your evenings, subscribe to Bloomberg Podcasts out on YouTube. That's the best way to see us. Paul, I'm looking at, they want me to do more econ data from Asia. Singapore was under 1% inflation pre-pandemic.
Yep.
They spiked up to a 7% inflation.
Did they? Wow.
And they've come about 2/3 of the way back.
Okay.
I mean, they're disinflating like everybody else.
Love Singapore.
And that's the... Do you?
I love Singapore.
I've never been there when it wasn't 90 degrees.
Oh, it's always 90 degrees. It literally sits right on top of the equator. I mean, you know.
Did you go to Raffles?
Yes,
Did you go to
Raffles.
Raffles?
I went to absolutely the Long Bar at
you
Raffles.
go to the Long Bar at
yeah,
Raffles.
absolutely. They love me there.
And
it's great.
Fullerton's Hotel.
Yep, that's solid too.
They wouldn't let me wear a Speedo though.
No, of course.
It's conservative.
Thank goodness.
Thank God for that.
Please.
Good morning to Singapore as well. And again, the best way to see us out on YouTube and subscribe to Bloomberg podcasts. Again, futures up 41 with our news in New York City. John Tucker.
All right, Paul and Tom, an alleged attacker detained by Austrian police on Wednesday, had been planning to attack concert goers at Taylor Swift's show in Vienna with homemade explosives and knives. This, according to Austria's intelligence chief this morning. The police say 19-year-old Austrian citizen had likely planned the attacks alone, but was in contact with 2 minors, including one of whom was slated to work at the concert venue. The foil plot prompting the organizer to cancel all 3 shows in Vienna that were part of the final leg of Taylor Swift's sold-out Eras tour. Now a sprint through the key battleground states for Vice President Kamala Harris and her new running mate, Minnesota Governor Tim Walz.
Donald Trump, he sees the world differently than we see it. He has no understanding of service because he's too busy servicing himself.
Governor Walz speaking there in Detroit. Meanwhile, his opponent for the vice presidency, Ohio Senator J.D. Vance, was tailing the Democrats. He spoke with reporters by Harris's plane, Air Force Two, near Eau Claire, Wisconsin.
We think it's important to get out there, to talk to people, to make the best case that we can. And obviously there's an element of, especially local media is going to cover her because she's the vice president and a presumptive nominee. So we think it's important to have a counter narrative here, and importantly to drive home this point that she has been a dangerous radical.
Meantime, Donald Trump plans a news conference this afternoon in Florida. Tropical storm Debbie making a second landfall in South Carolina on its way up the East Coast, where residents as far north as Vermont could get several inches of rain this weekend. And meteorologist Rob Carolan is tracking the storm.
John, the circulation associated with what's left of Debbie continues to produce very heavy rain over portions of the Carolinas, and this will be spreading into Virginia today. We're looking at numerous flash flood watches and some warnings from northeastern South Carolina across North Carolina, then up along the Appalachians all the way into central New York.
And Debbie came ashore early this morning near Bulls Bay, South Carolina. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Paul and Tom.
Thanks so much, John. Esteves, good morning from Luanda, Angola.
Whoa.
How cool is that?
Wow.
Good morning from Africa.
Absolutely.
From the former Portuguese
Is it?
colony.
Okay.
It's still very vibrant, you know.
Awesome. Welcome.
We say welcome there. It's the reach is just unbelievable.
It's an interweb thing, John.
Malaysia and Angola, Singapore, New Jersey. I mean, all the foreign countries.
Well, they're watching, but do they like it?
Well, no, they don't like it. Well,
okay.
I get the hate mail. Lisa gets
curiosity.
all the love notes. I mean, it's ridiculous. Give me a Hurricane Debbie, New Jersey update. It's coming up
Friday,
like Washington
maybe,
slammed?
according to our meteorologist, Rob Carolan, probably not as severe in terms of the rainfall as we got earlier this week when we had that cold front move through, but still the possibility of localized flash flooding, several inches at least.
But Saturday and Sunday, bright sunshine.
Yeah,
come on down.
And
to the
where
Jersey
is
Shore,
Paul going to
folks.
be?
Absolutely. Come on down, folks.
We turned the air conditioning off last night.
I opened the windows.
Yeah,
it was 70 degrees at the Tucker
First time in
Mansion,
ages.
but still pretty humid.
Yeah, vet bill complained. He wanted the AC on. That's that. Good morning to all of you. The claims report, not the jobs report, claims changed the market. We are lifting up 48, Dow up 175, and the VIX is the big signal to me into 25.73. Sort of redux in yesterday. We'll see where we are this afternoon. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, after wavering for most of the morning, we're now seeing a lift to the markets after more economic data came in. Initial jobless claims, that's what we're talking about, came in lower than expected. 233,000 unemployment applications were filed last week, a drop of 17,000. Now, there were fewer applications in states that had registered large increases in recent weeks, places like Michigan, Missouri, and Texas. The prior week revised up to 250,000. Futures right now, NASDAQ futures up nearly 1%, 175 points. Dow futures up about 0.3%, 123 points. S&P futures up just over 0.5% at 37 points. We have the 2-year yield at 4.02%. That's up 5 basis points. The yield on the 10-year 4.98%, and that's up about 3 basis points. I have to point out Bitcoin up now 5%, 50,972. Major cryptocurrencies ticking higher. Why? Well, a big part of that, blockchain-based digital payment network Ripple. It was ordered by a U.S. court to pay a $125 million penalty.
Ripple?
And that's just a fraction, yes, what the SEC was looking for. Ripple, R-I-P-P-L-E, yes. Earnings, shares of energy drink maker Monster Beverage down 7% and missed second quarter profit estimates.
No.
And then Delta, the carrier being hit with a proposed class action lawsuit. Inadequate refunds following the CrowdStrike outage. Delta shares up about 1%. That is your Bloomberg Business Flash.
You drink Monster?
I do not drink Monster.
Good.
Celsius a little bit more.
A little bit on the energy side when
yeah.
you're doing your workouts?
I'll do the Celsius.
Okay, all right.
Wasn't Ripple?
He's on
Yes,
Ripple.
oh, don't go to Ripple. I know
Ripple's
where
a
Tom's going with
fortified
this.
wine,
Yes.
right?
Back in the day.
Like, you know, you had MD 2020.
Yep.
And if you were going out with a cute girl, you had to get the Mateus because that had the woven, you know,
Yes, that's right.
the basket weave
bottle,
kind of thing. So you're sophisticated. Ripple is like a Bitcoin thing?
It's blockchain, like a payment network.
I can't keep
Digital
up.
payments, yes.
Good morning to all of you who survived Ripple and remember the joy of cold duck?
Oh, man.
You were living large with the cold. You know, Lisa
I don't
has
know that
no
one.
idea what we're talking about. Here's what we're talking about. We thank you for all of our support with futures up 42. Bloomberg surveillance brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. We thank Interactive Brokers for foundational support as we do. Futures up 41, Dow futures up 152, and the VIX, there's the VIX comes in 26.06. Rich, where am I going here right now? I mean,
Let's go to Anna Wong.
We had to wire up with Dr. Wong. She's so
Yes,
popular.
I know.
You know, when she comes on, she dims Staten Island out.
Exactly. PhD from the University of Chicago. I think they had math there.
And hugely influential right now. It's a different influential than what we saw from Claudia Sahm. Thank you, Dr. Sahm, for joining us for Jobs Day, where we made some international news with her talking about the Sahm rule. Let's start there, Dr. Wong, just because it's an uproar right now. Is the Sahm rule in effect? Claudia Sahm would say, you know, people are interpreting this wrong. What do you say, Dr. Wong?
I think that, you know, the core argument for why they think that Sahm rule will be violated this time is that the unemployment increase is driven by labor force expansion. But the reason why I think they are wrong, in fact, that the Sahm rule will hold, is because in all the previous recessions, we actually do see that the initial increase in unemployment rate was due to labor force expansion. In fact, that was the reason why Bill Dudley changed his mind as well, because the core evidence that changed his mind was that he noticed in 1970s the labor force expanded very swiftly as well, but the unemployment rate still continued to rise.
You have galvanized the economic conversation on birth death, and you're saying we're overstating constructive jobs statistics. We have, for many of our listeners and viewers, a two-part economy. It's America and all that we know in jobs, in this word immigrants. How do you do your birth-death analysis given a two-part American economy, including immigrant supply coming in?
Yeah, so, you know, interestingly, foreign-born workers disproportionately are proprietors of small businesses in the U.S., more so even than native-born worker. So when you think about the absorption of new immigrants into the U.S. labor force, you would think that they would tend to be employed by, their networks of people who's also immigrated from their same country in these small businesses community. So in cyclical turning points of the U.S. economy, it is the small businesses that tend to be hit most and tend to be missing in the non-farm payrolls as they go bankrupt, and that's what the birth and death model is overstating, which is that it is undercounting small businesses' deaths, and as a result, overstating the level of employment. And if you think that the new immigrants should be disproportionately captured by, employment by small firms, then this would actually be missing the unemployment of new immigrants, which is actually what we are seeing. We are seeing a sharp increase in unemployment rate of new immigrants in the recent months.
Hey, Anna, later this month, Tom Keene, Lisa Bromwitz, and Michael McKee will be leading our coverage out at Jackson Hole. What do you think they're going to hear from some of these central bankers here later this month?
I think this Jackson Hole would be so ironic because the theme of the Jackson Hole is reassessing the transmission of monetary policy. And a lot of the papers that went into this conference had already been written several months ago by academics. And those academics are probably using the non-farm payroll data that's been contaminated by the lagging birth and death models. And they probably would come to the conclusion that, in fact, monetary policy does not have as much of an effect on the economy as in the past, which would be a quite ironic conclusion to come to in light of what happened since last week.
Anna, what are you writing about into the weekend? What's the number one thing you're focused on?
I'm focusing on the 100th decimal point of the core PCE deflator that we'll get next week after we get the CPI.
You're on to 100th of a decimal point?
Geek.
I think that's what all the Wall Street people would be looking at. I mean, the market might be influenced by the PPI on Tuesday, CPI on Wednesday, and both of which probably will be pretty soft. But what matters really to the Fed and the smart money, I would say, is what those two reports would imply about the core PCE deflator. And the interesting thing is, if the core PCE were to be higher than 0.14%, then the year-over-year core PCE would actually take up to
your agreement with Bloomberg Economics, does it say on paragraph 4, every report you've got to go to 10 to the minus 3 scientific notation? Is it in there?
I think that we are all rushing to the bottom right now. Probably the next thing you know, we'll be forecasting 1,000 decimal points.
Yeah, we'll be out minus 3 or even 10 to the minus 4. How, in August, you got to do some scientific notation to wake the kids up. Did you ever notice how your kids, their brains go in August?
It's time to get back to school.
Get back to school. Anna Wong, thank you so much. 10 to the minus 4 scientific notation with Anna Wong, industry leading, national leading, I should say, on birth-death model. The Sweeney yield, it spikes 10 basis points, 4.06%. Paul, what's it mean?
I mean, I'm looking at the mortgage. We had some mortgage rates coming down here. Maybe they'll be ticking back up here. But again, we've had a 10 basis point move here in a 2-year, back up higher, 4.06%. The 10-year, Tom, sitting right at 3.99%. I'll round that up to 4.
You're talking to Dr. Wong. I'm out on the internet looking for the photo of Lisa Abramowitz canoeing at Jackson Hole. She took her paddle and swatted a trout.
Really? Okay.
Yeah.
Excellent.
It was great.
We had it for dinner out there. Why not?
Hit it over the head. Lisa Abramowitz and myself. We'll go out to Jackson Hole and see what's what. Paul Sweeney guaranteeing sun Saturday morning. Yes. Good morning.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Thank you for being with us on YouTube, Bloomberg Podcast. Thank you for the growth that we're seeing there across the nation. In Europe, good evening, I should say. On the Pacific Rim, from Singapore on up to Japan, we are humbled by the Pacific Rim response as well. I got to say again, good morning, Angola.
Who doesn't?
Who doesn't? I don't know how many people we've got in Angola this morning, but there we are. Brian Belski, this is the interview of the week if you're a scared bear. Brian Belski coming up here on the positioning after the pullback that we've seen. And Paul, we see it with the VIX. Let me see, 23 up to 28, and off claims we come into 26.
I know. We're 26.22. I know you want to see it down closer to 20, Tom. A lot of folks feel comfortable below 20. We'll see how that plays out.
Got a target point there of 22.21. I don't have that in front of me, but I'll straighten that up as we get there, as we heal off of this market gyration. Dollar fractional strength. Yen weakening 147.05 of note there in the late night of Japan. Good morning to those listening on YouTube in Japan. From the Interactive Broker Studios with our Bloomberg Business Flash, Lisa Mateo.
Yeah, and the markets look a lot different than they did an hour ago. Green on the screen. Initial jobless claims fell last week by the most in nearly a year, and that really helped ease those fears that the labor market cooling too fast after last week's disappointing jobs report. So now we have NASDAQ futures up more than 1%, S&P futures up 0.7%, Dow futures up 0.3%. We have the 2-year yield at 4.05%, up 9 basis points, and the 10-year yield at 3.99%, and that's up 5 basis points. To earnings we go. Yes, Warner Brothers Discovery now down 10%, posted that nearly $10 billion quarterly loss. Eli Lilly up 12%. It lifted its 2024 sales outlook for the second time this year. That was thanks to strength of its weight loss drug Zepbound, but it's the opposite of what Novo Nordisk said, who said that sales of its weight loss drug Wegovy disappointed. Novo Nordisk ADR is battling back up about 5%. And Bloomberg analyzed the data, found out that America's weight loss drug capital is Bowling Green, Kentucky.
I've spent a lot of time in Bowling Green, Kentucky.
Really? No kidding.
Yes.
Tell us about Bowling, cut and chiseled one.
It's the home of the Chevrolet manufacturing plant for General Motors. But one of my roommates in high school lived in Bowling Green. Spent a lot of time there. Great people down there.
They apparently like their weight loss drugs.
Sure.
4% of residents receive prescriptions. Yeah. In the past year, and that was compared to
Is this thing
Brooklyn,
still on the
1%?
up and up now? I mean, our next guest, he's not worried. He's so cut and chiseled.
Yeah.
Belski starts the morning doing 10 kilometers.
Exactly, I know.
He doesn't do 10,000 steps. It's like Olympic level. Lisa Mateo, thank you so much. This is classic Belski, folks. He writes a mental note, paragraph to paragraph. You hate him because if it's a 6-page note, you got to read all 6 pages. He writes a blistering 2-paragraph, 3-paragraph note, which is what everybody calm down, figure out what you're going to buy when you have the courage to buy. Brian Belski, BMO Capital, joining us now. Brian, what will be the signal for you to take that list of equities you've got and pull the trigger and buy at the margin?
Well, good morning. The market seems to be this fire aim ready again, which for us creates great opportunity because we have a process and a discipline. The names that, we listed in our note this morning are all kind of core names. And because we don't do a lot of or invoke a lot of turnover in our portfolios that we manage for our great wealth management system in both the United States and Canada, our clients are already invested in those names. And if you take a look at where there's been blood in the streets, not like a Warner Brothers Discovery today, because obviously there's some operational issues there, but names like Morgan Stanley that were down, or the Apple pullback, or even Lululemon, when there's
right.
strong fundamentals underneath that, Tom. We want to own those names longer term. We've had an opportunity this week to kind of rebalance portfolios.
And what's important here, folks, is the adults look at the Bloomberg and they use fundamental, technical, and economic analysis. Paul, the weekly chart, not the daily gyrations. Smooth it out a little, Paul. The weekly chart. Take it logarithmic, Standard & Poor's 500, and Belski has this tattooed to his brain. We are perfectly back to the long-term bull market moving average using the exponential moving averages I use. We haven't even broken long-term support, and we're all going to cash.
We're all going crazy. Tom, you know, about 1 million years ago, Brian was a student at St. Cloud State University, so I had to Google map this. Dude, it is practically in Canada. It is way up there in Minnesota.
It's good hockey.
And it's on exactly
hockey.
the Herb Brooks National Hockey Center's there, Tom. It's
Mr.
right on the
Brooks
Mississippi
changed
River.
Yeah.
I forgot the Mississippi River's all
I
the way
played
up
with
there.
animals from Edina, Minnesota.
Yeah.
And they were like basically junior A players from Canada masquerading as
Holy
Americans.
cow.
Continue with Brian.
All right, Brian. People were freaking out in Monday morning, Brian. There was a sense of panic in the market here. I mean, did you sense that? And what does that tell you about maybe how investors are thinking about this market?
We did, Paul. And, you know, it's still the old notion, attention spans of gnats. And, oh, by the way, it's gotten worse. We seem to have forgotten that August is usually a very bad month. And we've had it in 2022 and 2023. But if you go back to the 90s, it was 5 straight years where August were negative. And it's really, I mean, especially this year, Paul, I think, too, because a lot of people are on vacation. And the adults are away, quote unquote, and I think that's what's caused. Even this morning, with the goofy move in the treasuries off of an employment report, which we are guessing, by the way, that the employment report is going to be restated and not as bad next month. So I think people are way too macro oriented. We've said it on your network before. We think this is like taking candy from a baby, meaning you want to be an investor, you want to buy good companies, you want to buy the dip. And it's the old notion of the Warren Buffett rule is that you buy when there's blood in the streets and there's lots of emotion. So we're actually excited about what's gone on because this is actually quite normal.
Quite normal. Yeah, a lot of folks, Brian, has been saying, you know, in a normal bull market, you do need to see some pullbacks here, 5, 10, 15, 20%. So maybe that's kind of what we saw a little bit here. How about some of these big tech stocks that historically have moved this market higher? They have been weak. There's been that rotation trade. What do you do with some of those big tech stocks here these days?
Well, we really continue to believe that from a thematic basis, those big tech stocks, we call them the Super 7, are really your consumer staple stocks now. And you keep core positions there, much like Warren Buffett did, by the way. He just sold a little Apple. He was way overweighted and he's owned the stock for 20 plus years. So I think that's been there's been way too much negativity surrounding that. But then you start buying these other tech stocks like Palantir and Oracle and AMD and Qualcomm and Broadcom. But I think what people are missing is the broadening out effect of owning a little bit of everything. It means small mid-cap stocks. It means value stocks. It means financials. It means playing themes and being more fundamental.
Brian, I got one final question. It's all this tech love. I get it. I don't even know what Palantir is. What do you do with Wal-Mart? I got a company with single-digit revenue growth popping a forward 27, 28 multiple as well. Is there finally now an opportunity with these slow revenue growers with these huge valuations? What do you do with Walmart?
We love Walmart. We own it in 3 or 4 portfolios. In the consumer staples space, our core names are Costco and Walmart. Who's not going to shop there? And especially considering if people are worried about stretching their dollar, they're going to go to Walmart and they're certainly going to go to Costco. And I think Walmart's done an amazing job on their web platform as well. I think it's a name that a lot of core people don't own the stock in core portfolios. So I think there's a real opportunity longer term there as well.
Lisa, do you want to drop in a question here on Costco to Mr. Belski here? I mean, she is our securities analyst on a $1.50 hot dog.
You know, they are increasing their membership. But that's how they make most of their money. Is this where some of these retailers are going to go toward more the membership route? Is that going to attract more people in?
I think that might be part of it too, Lisa. You remember here in America's heartland of Minnesota, I mean, we sit and stand in line to get gas at Costco. because we're very cost conscious. The American consumer is super smart, Lisa. If they have $100, they're going to spend it where they can get the most for $100. And so I think that we can't discount how strong and consistent the U.S. consumer is.
How do the Vikings look this year, Brian? We got to go, but I mean, is this finally where the Vikings get their act together?
Oh, we're all excited. We got training camp. We got a new quarterback, which means probably we're not going to do very well.
Very good, Brian. Brian Belski, thank you so much with your Vikings update from Minnesota. Next time we have him on, we've got to talk to him about the vice presidential nominee of the
St.
Democratic
Cloud,
Party.
Minnesota.
It's
How
great.
fun would that be?
They're a tough hockey team. I'll tell you that. They
Sounds
invented.
great.
No, you're not going into the corner this late in the game. Brian Belski, BMO Capital Markets. Let me tell you, he minces no words. Shut up and get ready to buy when you choose. Futures up 44. With our news in New York City, John Tucker.
All right, Tom, Paul, Lisa. Austrian security officials say the main suspect of the two arrested in a foiled plot to attack the now canceled Taylor Swift shows in Vienna fully confessed to plans to kill as many people as possible outside the concert venue. Officials telling reporters at a press conference in the Austrian capital they found ties to the Islamic State group where the 19-year-old began working on his attack plans back in July. Kamala Harris and Tim Walz making a Midwest swing this week with J.D. Vance visiting some of the same states. More from Bloomberg's Ed Baxter.
For Harris and Walz beginning in Michigan and Wisconsin, Harris calling them happy warriors.
Do we want to live in a country of freedom, of compassion, of rule of law?
Walz going directly after Trump.
He mocks our laws. He sows chaos and division amongst the people.
And J.D. Vance defending the name-calling.
Look, I think the president, obviously, he loves to give people nicknames.
And Trump on Fox.
There's never been a ticket like this. This is a ticket that would want this country to go communist immediately, if not sooner.
Just the beginning form of what we can expect into November. Ed Baxter, Bloomberg Radio.
In the meantime, Donald Trump has scheduled a news conference this afternoon in Florida. Tropical storm Debbie making landfall again this morning, even as residents of the South deal with Debbie's initial blow.
Everything in the house is underwater. Appliances, beds, everything. We just didn't have time to get it out. It came in too quick.
Debbie came ashore near Bulls Bay, South Carolina. Heavy rain and possible flooding possible all the way up through the mid-Atlantic and the Northeast by the weekend. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Tom.
To be clear, it's not Hurricane Debbie. Right, it's like, what is that, like 60,
It initially, when
miles?
it hit the Big Bend area of Florida, was a Category 1 storm, downgraded after it weakened to tropical storm, went off the coast again, coming back again. It is now a tropical storm. But big threat, it is a huge rainmaker.
Well, that's where I wanted to go. I mean, hurricane's about wind, right?
Yeah, this was
So it's less wind.
Less than 50 miles an hour.
So
still,
if it's less, does that mean it gets more rain? I don't know. We got Carolyn out.
I don't know that there's a correlation between the two. More wind, less rain.
Yeah, I don't know.
A lot of rain with this one. Yep.
I don't know. But you're saying we get sun Saturday.
Sun Saturday.
Guaranteed.
Come on down to the shore.
Okay, well, we'll have to see. John Tucker, thank you so much. Futures up 44. We need to get the market open here in 15. It's got a special treat for you. Stay around. C'est bon. The VIX 26.11 is in nicely. Claims doing better than expected. Less of the recession gloom as well. Look, Brent crude 78. What do you do with Brent crude at $80 a barrel?
Yeah,
We're
I
not
know,
there
here we
yet,
are.
but you know.
Yep. A little bit move higher.
It's like a constructive. I'm all fired up because of Belski. Belski gets me fired up. Like I may have to leave the triple leveraged all cash fund. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing after a drop in initial jobless claims. That seems to be reassuring markets that the workforce is kind of reverting back to its pre-pandemic trend. Right now, we have NASDAQ futures up more than 1%, S&P futures up 0.9%, Dow futures up 0.4%. The two-year yield at 4.07%, that's up 10 basis points. The 10-year yield, 4.00%, and that's up 6 basis points. Moving the markets, yes, dating Apple Bumble down 39%, slashed its annual revenue outlook. Sportswear maker Under Armour, they're up 13%. Fiscal first quarter revenue topped estimates. And then from a sportswear maker to a sports figure, Simone Biles leotards, they're igniting sales of this Made in America brand. It's called GK Elite. It's in Reading, Pennsylvania. Nice. They made the leotards, and now a lot of the young gymnasts, they want to wear what they're wearing. So sales are going crazy.
Reading,
that is your Bloomberg Business Flash.
Lisa Mateo, thanks so much. Greatly appreciate that. Futures advance of 51 points on that Mateo data check. Of course, we want you to know the Olympics. Of course, with all the wonderful work from Paris. Our Summer Games updates, they're brought to you by State Street Global Advisors. Scheduled tomorrow around her schedule, and we'll see Catherine Greifeld's surveillance team coverage from Paris. There's a photo out with her on Twitter.
Yes.
It's not that she says it's a brat summer. You know, she's over there hanging out, living large. It's that she's at Place Vendôme in Paris, and that's like triangulation of the Louis Vuitton Maison Vendôme, the Chanel Vendôme, the Dior Vendôme. That's where Greifeld's hanging out. We hope to have a team coverage report tomorrow. In the meantime...
Éloignez-vous de la porte qui se ferme.
Charlie Pellet joins us right now. Surveillance Europe on $5 a day. Correspondent. The Olympics, Charlie, a huge success. I think everybody underestimated.
I think I totally agree with you 100%. The only flaw, swimming in the Seine. I honestly thought that they were going to get that thing resolved. I thought that it wouldn't prove to be an issue. And I thought, I even extended an invitation to the three of you to raise money for charity. To go swimming in the Seine on behalf of some Bloomberg charity, and I can see us now.
Nowhere.
And it went nowhere. But the idea of me, you, Paul, in our speedos in the Seine, we would be able to raise some money for somebody somewhere.
The fish would jump out of the river. I think, Charlie, what do you observe right now in terms of European tourism? You are eagle-eyed. What I hear from airline executives is transatlantic is literally saving them right now.
Tom, you really know what you're talking about. Either that or you follow the information on the Bloomberg here. I think case in point was the news that we got out of Air Canada saying a lot of people were staying away from Europe. Why? Because of the drum beating about the high costs. And then there's one school of thought, which I don't subscribe to, which is stay the heck away because you got the Olympics.
Okay, Liz Young's on the phone. She's about ready to walk away if we continue with Pellet. Charles Pellet, our Europe on $3 a day correspondent. Joining us now, an important conversation, Chief Investment Strategist for SoFi, Liz Young. Thomas, Liz, what are you doing with the technology stocks? We've had a hiccup here. Our last guest was enthusiastic. Are you still enthusiastic on the Magnificent Seven?
Yeah, you've got me on after Bullish Belski, who is from Minnesota. I'm from Wisconsin, and there's a big rivalry there. I think Wisconsin wins, but I like that we have a Midwest morning going on. So I think what happened starting last week, end of last week and into early this week, it was mostly macro driven, and things continue to be macro driven as we hang on every data point and try to figure out what the Fed is going to do. How that translates into technology stocks is that we came into this environment having been led by the Magnificent Seven. We know that we've had another very concentrated rally. When markets hit the skids and investors get skittish, whether it's macro related or otherwise, the stuff that has led us up is the easiest to sell. So that's what we've seen happen here. We've seen people starting to take gains, trying to protect their winnings because we got nervous. And I think sentiment is still shaken despite what's going on in the futures market today, which is nice to see. But I think sentiment is still shaken given how dramatic and quickly things went between Thursday of last week and close on Monday of this week.
Liz, has the market performance Friday through now, has that been a reasonable market response to maybe a slowing economy that we saw on Friday?
Well, you know what's interesting is what we do know is in the short term, markets tend to overshoot both on the downside and the upside. And what I think markets have tried to do Tuesday, Wednesday of this week is recover from what happened on Monday, but haven't quite been able to get there. So we've seen some intraday moves that have been very positive in broad indexes, but then we finished the day lower than we expected to. So we kind of run out of steam late in the day, and there could be a lot of different drivers of that. It's interesting that the sentiment hasn't held yet, and that's why I say I think things are still shaken. Now, the question of, is this reasonable given cooling economic data? I do think it's reasonable, and I wrote about that today in my blog, that when you look at just the difference between the effective Fed funds rate and the 2-year Treasury, what it tells you very simply is that the market says the Fed needs to cut rates. Now, whether the market is correct about that or not doesn't really matter, but what it tells me is that the market has started to bake back in the possibility that this won't be as soft of a landing. And frankly, when we were so convinced that we've already secured a soft landing, that made me nervous because we didn't have a lot of room for any other possibilities to take shape. So here we are with, I think, a more balanced risk view, which is, in a lot of ways, is a good thing.
A very important question, Liz. You're at SoFi, which has a huge tech heritage. Is there a tech confidence into the autumn months? AI confidence, EIEIO, the huge data center build out. Do you sense a tech confidence, or is everybody timid right now?
Well, I think there's a difference between what's happening inside company walls and then what's happening as investors see what's going on outside company walls. So what I mean by that is when you look at the reactions in the market, the confidence comes from companies saying, we're spending more on AI. We've got CapEx cycles that are still healthy, and we're looking towards the future, and we're excited about what the future holds. The AI theme, in my opinion, continues to be a 2 to 5, if not 5 to 10 year theme that will take shape over time. Of course, there's enthusiasm about how it's going to change industries over that period. But what investors are interested in right now is how it's going to change earnings over the next 12 months. And they're not getting as much satisfaction as I think they want out of that. So we've heard all about this CapEx cycle. Now investors are looking for, where's the monetization of it? Where's the profit that I can get? Where's my ROI? And what's tangible about AI in this moment? And there's not as much tangible as what I think investors have wanted by this point.
So let's broaden it out a little bit just to earnings here. Presumably earnings still matter, Liz. What have you seen so far during this earnings cycle as it relates to market valuations?
I mean, Q2 has been very strong. The results have been very strong. But as is usually the case, the guidance is what matters. And if you look at what's happened in Q2, things have beaten expectations, and that's great. I don't know that anybody really expected Q2 to be a problem, though. So it shouldn't be a huge surprise that Q2 has gone decent. When you look at Q3, though, everything has been sort of ratcheted down. Expectations have come down pretty dramatically since the beginning of this earnings season. So it's clear that companies are getting more careful. They're protecting their margins. And we've heard messages from retailers and consumer-facing companies that the consumer has slowed down or at least changed its purchasing behavior. So that's always something to pay attention to. But it's not necessarily this huge warning that something bad is coming. We needed consumers to change their behavior a little bit in order to keep inflation under control.
Liz, thanks so much. Liz Young-Thomas with us this morning, SoFi, here with a more measured view than I think what we heard from Mr. Belski before. But that's what this is about. All sorts of
Tom,
different conversations.
Having traveled all over the world meeting institutional investors, Tom, here's my take. Pound for pound, I think some of the smartest money managers are in Milwaukee, Wisconsin. And I don't know why. But some of the smart people we talk to, maybe it has to do with this University of Wisconsin.
No, I think Marquette, I think Madison has a lot to do with it, with world-class economics, and Marquette, I think, has a finance.
The strong funds were there but training a lot of people.
I take your point. I do agree that there's been a huge heritage there, and of course, it's underestimated by 3 zip codes in New York and 1 zip code in LA and 2 zip codes in San Francisco. And that futures advance up 52. We need to get the markets open. It's Bloomberg Surveillance. Stay with us on YouTube.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. Markets have certainly taken a turn since we found out that U.S. initial jobless claims fell last week by the most in nearly a year. And that really helped ease those concerns at the labor market, cooling a little bit too fast after last week's disappointing jobs report. Initial jobs claims, 233,000 last week. Let's see how it's affecting the markets right now at the open. S&P 500 up 1%, 52 points at 5,252. The Dow up 0.4%, 169 points at 38,946. And the Nasdaq up more than 1%, 226 points, 16,421. We have the 2-year yield at 4.08%. That's up 11 basis points. And the 10-year yield at 4.01%. And that's up 6 basis points. At the open, also want to check in with Bumble. Their shares down 34%. That is your Bloomberg opening bell report.
I can't pull the trigger there. I just, Paul, I don't know what to do. Let me look at another Warner Brothers
left?
Discovery here.
Boy.
Well, it's at 7. It's spiked from 6.75. Are these meme stocks?
I don't know what's going on with Warner Brothers Discovery.
I
don't know
where I
is.
was going. Dow up 210 points. The VIX, we got to quote the VIX a lot in this segment. Yep. The VIX, 25.71. Long ago and far away, and if you go to the Chicago Art Institute, in the way back by the Chagall, there is a wooden room. And unfortunately, they cleaned it up. It is called the trading floor. And it's an actual extant trading room from Chicago of another time and place. For me, it's emotional. My grandfather used to hang out in that room. Unfortunately, they fixed it up. I mean, I've seen photos when it was ancient and worn out. Not ancient and worn out is Henry Schwarz, CBOE Global Head of Client Engagement, and the new derivative landscape, the new speed with which we're trading. Henry Schwarz, what was your first day as a floor runner at Hull like? Take us back to another time and place. What was it like your first day as a floor runner?
Well, that was actually summer of 1987, and CBOE floor was packed. There were probably about 1,800 people down there. I had no idea what was going on. They handed me some sheets to run out to the OEX trading pit, and I had to jostle through everybody to get into to find my guy based on the color of his jacket. Handed him the sheets, took his tickets, and then coming down the stairs, I dropped the tickets, and that was a disaster because then the trades that the guy had just done aren't going to clear, and you're going to get breaks, and it was a blast. And I was talking about the DK room with somebody last week.
It's gone, isn't it? I mean that world, and at the beginning of Lou Rukeyser, where they've got Wall Street Week, where they've got the guys with the hands doing eights and that. Right. Henry, that's all gone, right?
Well, there still is the CBOE has a trading floor. It's actually in the Board of Trade building in Chicago. Hand signals are really not used as much anymore. But you know what? If a lot of the guys in the VIX pit or the SPX pit, which are the two kind of dominant pits that exist, they still might hand signal each other if they're across the pit. It is kind of a reflex for a lot of the older guys.
What do you say to the shadows, the unknowns that we have from the many new short-term derivative strategies?
So, the story for the last year and a half has certainly been short-term options, zero DTEs, and the strategies around them. And there's definitely been a lot of concern. Are these products dangerous? I've heard terms like weaponized gamma and Volmageddon 2.0. We've had these continuously now for almost two full years. They're not just in SPX. SPX was the first place for them, but they're in the leading ETFs. They're in a few other indexes as well, and they're really well suited to certain types of strategies. And this very, very consistent volume in them. So, and the truth is, when we were down, futures were down 260 on Sunday night into Monday morning, we still didn't see any real massive fallout. And one of the reasons is because the zero-day options, the users of those options tend to put them on same day and close them out same day. So you don't have these big positions that are growing over time and that they're sitting on somebody's balance sheet.
Oh, a little bit of there we go. I got a little bit of frozen
Oh,
zoom
we have
there.
frozen?
That's a frozen zoom.
Should we let him go? Get it? We'll see if we can get Henry back here.
Called the DK room. The DK room is, I don't know the trade. We got mismatched trades. Boy, that brought back some bad memories.
Why don't you go to Henry Schwarz or CBOE?
October 1987 for me.
Yeah.
Hey, Henry, talk to us about the volatility we've seen over the last 4 or 5 trading sessions here. We got the VIX, which Tom keeps us focused on, 25 and change here. What do you make of the volatility we've seen over the last 4 or 5 sessions?
Well, I mean, I'll tell you, the volatility, the implied volatility, which from the SPX options is what's used to calculate the 30-day VIX. And there's also a 1-day VIX and a 9-day VIX and even some longer-term VIX indexes. But it reflects what's going on. And so the first half of July was really actually very calm, right? That's when we were having realized vol in the single digits and VIX was around 12. That's actually kind of what you expect. Middle of July, we had a real kind of inflection point, right? The market started to go down. There started to kind of be some rumblings, I think, of the concerns that really got very, very loud at the end of the month. So, when you have a real kind of a panic moment, which we did have on Sunday night, we haven't seen a move like that in the S&P futures for years. At that point, liquidity starts to dry up. People do start to panic. But what's funny is every volatility event that we've had for the last 5 or 6 years seems to be kind of a faster and faster cycle. And volatility is a mean reverting index, right? So it'll spike and then it'll eventually come back down. I think that's kind of what we're seeing now. Is there's a reset, and it's just kind of a healthy part of the market.
So, what do you make of the? I guess the real question here is this Federal Reserve. I mean, you think they're going to be pushed into something maybe a little more aggressive than they wanted to do? I mean, some folks are suggesting a 50 basis point cut in September.
I mean, it's really interesting to kind of listen to all the very smart people, kind of talk about what the Fed should do, should have done, will do next. This is all just kind of part of what we navigate in the markets. The Fed's going to do what the Fed wants to do. And, I was listening earlier and they are operating off of data and there's a lag in the data. But, I thought it was some very wise to hear, that the Fed kind of has to be a little bit, behind in the game because they're waiting for the data. They don't want to do anything too early. And, when we were down and I heard the calls for an emergency rate cut, we were not at the, people starting to lose their minds in the market. Also, we're still up, with pretty solid returns for the year. So, if we were having a flat year and then we had a, 3, 4, 5% down move, I think you'd start to have some real kind of fear. But, we saw obviously a de-risking, a pretty violent de-risking. Right. And now you're already seeing people kind of go back in and, every little data point where, people are going to try to figure out, okay, what's the best move around this data point. And, I think we'll see VIX, for the second half of the year. First half of the year, it was surprising to me that we're hanging around, 12, 13. Yeah. But dispersion was very, very high, right? So you had some stocks that were, firing higher, like Nvidia. You had some stocks that were actually, really getting hurt. But in the end, in the indexes, it was kind of netting out, and that's what diversification is supposed to do. So the index volatility was actually pretty low. VIX made perfect sense. I think the second half of the year, especially given all the U.S. political situation and the global conflicts, I think we're going to be probably sticking more in the 18 to 25 range.
Well, Henry, thank you so much for the Chicago Board Exchange, CBOE. And, of course, we'll have him on again when the White Sox win. Henry Schwarz, thank you so much. Dow up 271 points. The VIX enlarged, two big figures, 25.86. With our news in New York City, John Tucker.
And Tom and Paul, authorities now say an alleged attacker detained by Austrian police had been planning to attack concert-goers at Taylor Swift's show in Vienna with homemade explosives and knives. Police say the 19-year-old Austrian citizen had likely planned the attacks alone, but was in contact with another, including a person who was slated to work at the concert. They say the suspect has made a confession and all others allegedly involved in the plot detained. Democrats Kamala Harris and Tim Walz warning that former President Trump would overturn the Affordable Care Act and gut Social Security if he returns to the White House. Bloomberg government's Jack Fitzpatrick has more on the Democrats' economic message as their campaign moves through the industrial heartland.
That's what you would expect, especially understanding that Trump is running on a positive view of the economy circa 2019. And so Democrats can't simply let him be the candidate who's known for a good economy. They're going to hit him on those issues as much as they can. But it is something that the Democrats seem to be redoubling on after a little bit of a lack of focus on the campaign trail before the current ticket was set.
Bloomberg Government's Jack Fitzpatrick. Meantime, Donald Trump has scheduled a news conference for this afternoon at Mar-a-Lago. Bloomberg Radio and Television will carry that live, 2 p.m. Wall Street time, the schedule. Russia declaring a state of emergency in a western region as Ukraine's military launched what appeared to be its biggest incursion into Russian territory since the Kremlin's war began more than 2 years ago. Russian President Vladimir Putin summoning his top security and defense advisors to brief him on the effort to repel the incursion. Officials in Kyiv have declined to confirm or comment on the operation. And the head of the National Transportation Safety Board says aviation regulators should conduct more surprise audits and inspections at Boeing's factories to get an unvarnished look at its manufacturing. This comes months after one of its jets lost a fuselage panel in mid-flight. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Tom.
John Tucker, thanks so much. Fred emails in. It's a message for Paul. It says, tell Paul, minor flooding in fallen trees in Durham. The Duke Chapel, John Tucker, is still standing. I mean, to your good reporting and what Rob Carolyn's done, I think I'm taking this too lightly. Like, this is actually like, well, I mean, Durham's way in from the Atlantic Ocean, right?
And keep in mind, as we all know, several people have initially died as a result of the storm, whether it be accidents or things related to it. And the flooding has just been spectacular. 2 feet in some areas from the storm. And that is enough to get your attention. And obviously, it is making landfall once again this morning, and it's heading north. Slow-moving system at this point. I think last checked it was 4 miles an hour, but it will be coming up the east coast into the northeast as far as Vermont. And the last thing Vermont needs at this point is more rain, knowing the devastation they've had from swollen rivers over the past few months.
Yeah, well, we'll have to see on that, to say the least. We're looking at blue chip stocks this morning, which means we go to Lisa Mateo, scouring Bumble. I really don't know what to do with this.
Is Lisa a user of this platform?
No. But she's been team coverage here, and
don't get me in trouble.
She's been really on top of this story. I mean, it's what I mean. I just totally don't get it. I'm going back with a 10-year track record again. Get there. This thing has gone from 70 to 10.
They've been trying to revamp it. They've been trying to kind of reinvent it, and it just hasn't been working. I mean, a lot of people are just not using the dating apps anymore. I don't want to ask you, Tucker, if you're...
Well, who needs the platform when you get hit on by youngsters at the CVS? What was it? Oh, the Rite Aid. I'm sorry.
I see an HR violation there if I see anything. What I see, I go to the financial screen, and this is something that I think a lot of people on Wall Street would say, should that company be public? I don't mean Bumble specifically, but there's so many companies that for whatever reason they equitize so everybody can get paid off. I'm looking at $1 billion in revenue, 1,000 million in revenue. They're dropping 10 cents down to the bottom line. If they're lucky, it's more like 4 cents to the bottom line. And free cash flow, it's like the cash flow On the Deck has at Atlantic Highlands. I mean, should On the Deck go public? I don't know.
Well,
how did these things go public?
I have a few suggestions for the menu, but that's for another time.
Yeah, I mean, there it is, and thank you for that. I IPO'd a few years ago. That's your Bumble update this morning. We do that worldwide. The Dow up 360 points. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks getting a bit of a boost after initial jobless claims posted the largest drop in almost a year, falling by 17,000 to 233,000 last week. Now we have the NASDAQ up 0.8%. Same for the Dow. S&P 500 up about 0.9%. The two-year yield at 4.07%. That's up 10 basis points. The yield on the 10-year 3.99%, and that's up 5 basis points. To commodities, we have spot gold higher, $2,411 an ounce. Brent crude, $78 a barrel. WTI crude, $75 a barrel. Moving to companies, Eli Lilly, it lifted its 2024 sales outlook for the second time this year. It said there was strength in its weight loss drug Zepbound. Their shares up 10%. And then energy drinks losing their jolt. Shares of energy drink maker Monster Beverage, that's down about 12%. Its rival Celsius Holdings, that's down about 3%. And Warner Brothers Discovery, their shares this morning, they are down about 11%. After the bell, we move on to Paramount Global. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate that. Right now, and this is well-timed, because we've got to get out of the way because no one's going to care in October and into November. Celia Mosher joins us, a senior reporter in Washington with Bloomberg News, which barely describes her competence on our fiscal affairs. Yes, of Treasury, what is Secretary Yellen doing? And of course, her magnificent book that was out a year ago, but far more on what's not going to be talked about. Here's the way it works, folks. Congressional Budget Office is an absolute jewel. Full disclosure, I had an offspring once that seriously considered applying there to work. CBO gets it done, and they put out a budget forecast, and I kid you not, it's 87 pages. That's what Celia reads. I read the executive summary so I can try to talk to her. And Celia, I'm sorry, the big numbers in the fiscal are concerning, to say the least. 99% of debt held by the public, 99% of GDP. Outlays are $6.8 trillion. Money coming in is $4.9 trillion. Why are none of the candidates talking about the Mosen world?
This is the question, Tom, that I ask myself frequently. I ask other politicos. I ask market analysts and strategists and traders this question frequently, because everyone says that no one in Washington, the policymakers who run the country, who oversee public finances, no one here is going to pay attention to our deficit problem and our sad fiscal trajectory and outlook until markets throw a tantrum, the way they did in the early 90s when Bob Rubin was in the White House and then heading to Treasury. So my question is then for our amazing audience at Bloomberg and our subscribers, when will markets send a signal to Washington that enough is enough when it comes to raising deficits? The
bottom line, Alice Stiglitz and others, is what comes to the rescue is the growth rate of the economy. When you talk to Craig Torres, Scott Lamon, and all of our economic team in Washington, are we anywhere near the point, Celia, where the growth rate of America, or the guesstimate of the growth rate of America, causes us to look at our fiscal space?
It doesn't look like it. Markets are so far convinced that America can and will continue to manage its public finances in a way that debts are paid off. The U.S. is a rare case. We are the owner of the world's reserve asset, the dollar. And that means that you can't compare the U.S.'s fiscal profile with any other country on the planet. So we don't actually know what the limits are to how much deficit we can finance.
In Paper Soldiers, I don't know if you do this, but you can go back to Paul Tsongas of Massachusetts, Mr. Nunn of Georgia, Pete Peterson, who will always remain in my heart. Pete Peterson, I'm going to call a financier of New York. They would be appalled at these statistics that you live every day. Should we be appalled by them?
There's a couple of things I'll point to. One, and I write about this in the book Paper Soldiers, which is all about the dollar and the world's reserve asset and what we've done with it since it became crowned the world's reserve asset, is that I do think Alexander Hamilton, one of our founding fathers and the nation's very first Treasury Secretary ever,
he was a Broadway star. He was a Broadway star.
Yeah, he's
right?
a Broadway
Right,
star.
thank you.
He would be rolling over in his grave if he knew where the fiscal profile ended up 200 years later. But at the same time, I will say that our country, Hamilton wrote that debt is the price of our liberty. Credit is the price of our liberty. So to break free from Great Britain 200 years ago and keep going through all the wars and everything, we needed deficit. And so that's where we start. It's kind of just looking at how much deficit we have and whether we're overusing that as a tool.
I don't want to get you in trouble with Margaret Collins, our bureau chief down in Washington, but I'm going to go there, Celia. The former president speaks at 2 p.m. today. We'll have that, of course, across all of Bloomberg News and Bloomberg Radio worldwide. But Celia, the former president and the present vice president are going to discern a fiscal policy. Can you discern one yet?
I really can't. When it comes to Vice President Kamala Harris, we don't know a lot about the personnel behind any purported economic policy agenda. If she were to win, because she would be taking a Biden-Harris administration and turning it into a Harris-Walz administration, there could be a lot of holdover. She could ask cabinet officers, economic policymakers to stay. With Trump, it is a much bigger turnover. With Trump, there's more of a track record. We have seen what he did for 4 years. We have seen the kinds of people that he chooses and who is currently in his orbit. And those are very important clues.
Celia, I know why you did this. It is possible that 5:13 p.m. on Saturday, February 26, 2002, will be the precise moment where the ebb of the dollar empire. Paul, that was also the moment where the Red Sox traded Mookie Betts to the Los Angeles Dodgers. What's so important, Celia, about February 26, 2022?
That is the precise moment that the U.S. led allies to impose the harshest sanctions that any country has ever seen. And those were the sanctions placed on Russia, then the world's 11th largest economy, a G20 country. Its central bank was practically cut off from the dollar, and it shook the global commodities market. It made gasoline prices across America more expensive. It showed that the interconnectedness of the world economy around the dollar has massive consequences, and maybe it's not worth those consequences to have the protection of that dollar.
I got 20 seconds. Paper Soldiers. Have you sold the movie rights yet?
No, but you're going to play me, Tom. I've said this every time.
Very good. Celia Mosher, thank you so much. Folks, this book is absolutely brilliant about what we've lived through since the crash. Hugely acclaimed. I can't say enough about the success of Paper Soldier, Celia Mosher, trying to look forward, maybe even to 2 o'clock this afternoon. I'm sorry, I get criticized. I call him President Trump. I mean, I'm old. My mother beat it into me.
Sure.
It was Senator Goldwater.
Yes.
And this. You use the old titles. I'm old school in that. I just got a memo from HR. Is this the 15th consecutive Friday you're out tomorrow?
It very well might be. I'm setting a new land record here, but somehow they approved it.
Can you do an audible if there's no sun?
Exactly, potentially. So it's working out just fine.
Okay. Scheduled David Gurr tomorrow. Scheduled tomorrow. Catherine Greifeld from Paris. Scheduled tomorrow. Lisa Mateo from Costco.
Oh, yes.
That's what we'll see. I know Celia moved the market up. Look at that, Paul. We're up 473 points. I mean, it's even bigger than seriously, it's bigger than the yesterday lift.
And we'll see if Carol Masser and her afternoon team can continue to hold these gains that we give her every day.
They did not hold yesterday, to say the least. That's a little floody. Thank you to all our guests. People really publishing seriously right now with some real strong opinions. We'll try to bring you all those cross sections. Looking forward here, Alex Steele, Paul Sweeney, they'll get you to 12 noon, a special coverage of President Trump's press conference at Mar-a-Lago. Look for that at 2 p.m. As well. Much more other news for the day. Balance of power right in there in the sweet spot with Kaylee Lyons and Joe Matthew as well. We got to go to the yield space. The Sweeney yield explodes up 9 basis points, 4.05%. We're waiting for the sun. Bill Withers, good morning.
Sunshine when she's gone, and she's always gone too long. Anytime she goes away, wonder this time where she's gone. wonder if she's going to stay. Ain't no sunshine when she's gone, and this house just ain't no